Everyone knows Australia has 4 big banks, but the 5th biggest retail bank is snapping at their heels. It's a bank that's been around for over 160 years, has over 500 branches Australia-wide, looks after over 1.7 million customers, and is regularly voted one of the most trusted brands out of all the thousands of brands in Australia. Who is this fantastic number 5? Yep, it's Bendigo Bank. The better big bank.
Welcome everyone. I'm Robert Johansson. I'm the Chairman of the bank and I'm delighted to welcome you all here today to the annual general meeting. We have a quorum. This is the 154th annual general meeting of the company now known as Bendigo and Adelaide Bank. It's, though, 161 years since the meeting which was held to establish the first Bendigo Building Society, just down in Pall Mall was that meeting held, in Bendigo. And of course it was in the space where for 50,000 years the Dja Wurrung people lived in this valley. So I'd like to welcome you all, our shareholders, our visitors, into the midst of the office in Bendigo, in this lovely building, and welcome to all the staff who are here today, most of whom, of course, are also shareholders. So today's agenda is as follows. I'll give you an address, then the Managing Director will speak, and then we'll take questions from shareholders. It's an opportunity for you to ask us about anything, but if you've got a question about some specific item on the agenda, including an item on the financial accounts or remuneration, please keep those questions for when those items come up in the agenda. So, then we'll go to, after the question and answer session, we'll go then to the formal business. The accounts and audit matters will be presented by the Board Audit Committee Chair, Rob Hubbard, and then we'll move to the voting items on the agenda. There's a few items this year: 4 director elections, the remuneration report, proposal to issue securities to the Managing Director, and then 2 selective capital reduction scheme proposals. So you can ask questions on each of those matters when we get to them. Today's AGM is an essential element in making the board accountable to our shareholders, so we hope you take the opportunity to ask us questions, provide feedback, etc. For each item, we will be conducting a poll. When it comes time to vote, I'll ask you to cast your vote by clearly marking your yellow voting card. And then once voting has concluded, I'll close the meeting and I'll ask the incoming chair, Jackie, to say some words to you. And then after that, I hope you'll all join us for some refreshments. So now let me introduce people sitting up here on the table, your board. Not this fellow, I'll come to him later. The next one is Marnie Baker. She's the Managing Director. You'll remember she was appointed Managing Director a bit over a year ago. Over her 3 decades with the bank, she's held leadership positions across almost all areas of the group and has a sort of great experience with the business. Marnie's also a member of the Australian Bankers Association Council, the Business Council of Australia, Mastercard Asia Pacific Advisory Board. She's also a member of Corporate Executive Women. Next to Marnie is Jackie Hay. Jackie will succeed me as chair after this meeting. She joined the board in 2011 following a career with Ericsson's in technology, spanning more than 20 years, including CEO roles in Australia and overseas. She's now a director of a number of public companies, Qantas, AGL and Cricket Australia. As advised by shareholders, that's right, I've already said that she's going to become the chair at the end of the meeting. Next to Jackie is Rob Hubbard. Rob joined the board in 2013. He was an accountant and an auditor with PwC, was a lead auditor with several large listed companies. He's the chair of the Audit Committee and he'll talk to you in relation to the financial accounts. He's also a member of the Board Risk and Technologies Committees and he'll be seeking re-election. Then there's Jan Harris. Jan joined the board in 2016 following a career in the Commonwealth Public Service. She had a variety of senior roles in the Department of Treasury and the Department of Prime Minister, including most recently as a Deputy Secretary at the Treasury. She's now the chair of the Board Risk Committee and a member of the Audit Committee. She too will be seeking re-election. Then Tony Robinson. He was appointed to the board in 2006. He's a pre-GFC director. He's held senior executive roles with a number of listed financial service companies and he chairs the Governance and HR Committee. He's also a member of the Audit Committee and will join the Tech Committee. Then there's Vicky Carter. Vicky joined the board last year. She's worked for over 30 years, primarily in financial services, more recently in technology, including executive and senior management roles at Telstra, National Australia Bank, MLC, ING and Prudential Assurance. She's a member of the Board Credit Committee, the Governance Committee, and she's taking over as the chair of the Technology Committee. Then next is our newest director, David Foster. David was appointed to the board in September, so today was his second meeting. And so we will get to vote on his appointment to the board today. He's got a wealth of experience in strategy and finance with a career spanning 25 years, primarily in financial services with Westpac and Suncorp, including as CEO of Suncorp Bank. I said in the announcement that when we appointed David that it was important that bank boards had someone with real retail banking. No one got the Donald Trump allusion, but that experience is absolutely crucial and he's already been a great help on the board. Then David Matthews. David's a farmer from the Wimmera. He's been a board member since 2010. He's a member of the Board, Audit and Credit Committees. He'll be joining the Governance Committee. He is a pioneer and advocate of our community bank model, which had its beginnings in the 1990s in David's hometown of Rupanya. He represents the bank on the Community Bank National Council and he's been a long-serving director on the subsidiary Rural Bank. And he too will be seeking re-election. And then finally is Jim Hazel, who joined the board in 2010. He's a very experienced banker. He's worked in various roles with banks, including as a senior executive with Adelaide Bank in the 1990s. He's also a non-executive director of a number of public companies, chairs the Board Credit Committee, and is a member of the Risk Committee. Then finally, here is Will Conlon. He's been the company secretary now for 8 years, been huge assistance to the company and certainly to me. After today, he will step down from this role as company secretary, and his company secretary, Carmen Lunderstadt, who's here. She's the one you refer to now for all your questions. We're delighted you've joined us, Carmen. Will stay with the bank and is taking over a role as Chief of Staff. So we all thank Will a great deal for his sterling performance over those many years. In my letter to shareholders in the annual report, I discussed two matters. This is my last speech as chairman, so I'd like to revisit them. The first matter is the issues brought to a head by the Hayne Royal Commission into misconduct in financial services. My point was that while an investigation into the particular and widespread instances of bad, often illegal behaviour by banks and other financial institutions and by their executives and agents was well warranted, the crisis as it just didn't come out of nowhere. If we were to get to the underlying causes, if we were to have a chance of bringing about reforms to the industry to remove the conditions which not only allowed but even encouraged the misconduct, then we needed to go beyond the findings of the Commissioner. I suggested, fairly obviously I thought, that the underlying causes need to be understood in the context of the global financial crisis and the reasons why that crisis occurred and in the responses to it by governments and regulators. Australia avoided the worst of the financial crisis as it broke in 2008 and 9, but a decade later seems to have generated its own crisis, this time one of misconduct. So since the Royal Commission, there have been, I think, 5 books published, mostly rushed out, written by reporters who followed the proceedings on a daily basis. And there's been a plethora of new legislation and regulation and more inquiries into various aspects of the industry and its regulators. But only recently has there started to emerge discussion of the implications of the competitive structure of the industry. If the conduct in financial services has been so appalling, if customers are so angry, why have so few changed where they bank? One answer is that the major banks have had such large competitive advantages as a result of the rules on capital that it's very difficult for organisations with different operating models or with different forms of customer relationships to compete and to offer customers a different proposition. The major banks have had this advantage since 2007. I think there's no doubt that the wisdom that led to those rules in financial regulatory systems around the world actually contributed to the explosion in leverage, credit availability and poor risk management which actually led to the GFC. Now, while the impact of those rules has been reduced significantly, so the difference in capital requirements for advanced and standardised banks is now not as great as it once was, the advantage is still massive. It's likely that under the announced proposals from APRA on the new capital rules, that this advantage will shrink further, but it will still be decisive. Regulators have valued financial stability over competition, and as the various self and external assessments into the risk management and governance structures at banks now show, much of the work within the banks purportedly on these risk management systems has been ineffective, even counterproductive. But the response so far has been to impose even more regulation, even more bureaucratic interventions. But on the one hand, we want to encourage credit to flow easily and cheaply into the economy, and so the banks are encouraged to lend and the price of money is reduced further and further. But on the other hand, we want to protect the system against abuse. So we create more hurdles, more barriers to do anything, and so we think reduce the risk of mistakes. We think the better response would be to give more power to customers by ensuring that different organisations with different customer relationship propositions can compete on individual and separate products on a level playing field. A level playing field is not some abstruse intellectual construct, as the review of APRA by the Samuel Committee seemed to suggest, but it does require the system to accept, even encourage, a degree of dynamism, of instability, of creative destruction. If the new rules of ownership of data and open banking and all the investments in and encouragement of new challenger banks and fintech companies are to be more than short-term window dressing. This fundamental issue of more even, equitable rules for capital allocations across the industry has to be addressed. The second matter I discussed in my letter is the work we're doing to change and to adapt to the new digital world. Every part of our business, what we do and how we do it, is being interrogated and will need to be reconstructed. You, all our customers, have now been well trained by Google and Amazon to expect a seamless digital service wherever you are in the world, whenever you want it. So you'll be hearing a lot more from the bank about this transformation over the next few years. Of course, the transformation hasn't just started, it's been underway for some time now. For some time, the mobile phone has become the most popular way to access banking information and services. Our digital bank, UpBank, is attracting customers from every age group, but mostly from young people. Our connection with TikTok, the online home loan business, is proving a great success. But the amount of change over the next 5 and 10 years will be, I expect, more almost than at any other time. The relationships with our digital transformation partners, IBM, TCS, Ferocia, many others, those relationships will be crucial. Our old and established partnerships will be part of this transformation too, and we're working with all of them to produce a great range of ideas and locally adapted solutions. Community banks, all those partners and their communities, the communities in which those community banks operate, they're all challenged by this process of transformation, as are we, and we'll be working closely with them to produce these solutions. So thank you very much. I'd now like to invite the Managing Director to address you. Marnie.
Good morning, everyone. I'd first just like to acknowledge that we're meeting today on the traditional country of the Dja Dja Wurrung people of the Kulin Nation. I recognise their continuing connection to land, water and community, and I pay my respects to elders past, present and emerging. Bendigo and Adelaide Bank's own connection to community goes back 161 years to the Bendigo goldfields, where a group of miners came together to pool their funds for community prosperity purposes, enabling residents at the time to receive funding to build their houses. It was the genesis of banking itself, the notion that everyone should benefit from a financial transaction. The investor who provides the funds, the borrower, the bank's shareholders who bear the risk of the borrower not paying, and society itself. Today we are meeting in the head office of Bendigo and Adelaide Bank at a time when corporate culture and the importance to good customer and community outcomes has never been more pronounced. And culture is something that's hard to formulate for reporting purposes or to express in a few paragraphs in an annual report. It's something that you need to immerse yourself in to fully understand. And for this reason, our board of directors spend time in our organisation, attending meetings and functions, and speaking to and observing our staff to truly appreciate the culture of our organisation. We open our doors to you for this reason today, as well as to enable our staff to hear what is important to you, our shareholders. So welcome, everyone. I'd now like to turn your attention to the future and the fundamental shifts we're seeing in the banking landscape. There's no doubt that it continues to be a challenging environment for Australian banks. Record low interest rates, increased regulatory oversight, and the flow-on impacts from a myriad of inquiries undertaken in recent years is placing pressure on bank returns. In this previously uncharted territory or environment, policymakers are pulling the traditional levers of monetary and fiscal policy to stimulate economic activity, but with less than desired impact to date. Recent cuts to the official cash rate and once-off tax refunds, rather than strengthening confidence in the minds of consumers and businesses, in a perverse way, is having the opposite effect. Consumers are choosing to pay off debt rather than spend their additional funds. And businesses, while needing funding to grow, are finding credit harder to access. At the same time, major advancements in technology and initiatives such as open banking will continue to disrupt the industry. Open banking will allow customers to share their financial information electronically and securely under conditions that only the customer approves. The result will make switching financial institutions easier for customers and improve competition. However, with in excess of 100 financial institutions already operating in Australia, it begs the question why more than 80% of deposits and loans are held amongst only 4 banks. Whilst regulators are making it easier for startups and fintechs to obtain banking licences with a view to improving competition, they too will face the same structural features that create the unlevel playing field that regional and other smaller banks contend with today. The industry has also faced a heightened and important focus on community standards. As I mentioned earlier, community outcomes in banking have never been more important. Our community bank model continues to deliver significant social and economic benefit for Australian communities, a shining example of profit with purpose, or as we refer to it, feeding into prosperity, not off it. Since its establishment 21 years ago, the unique and internationally recognised community bank model has returned more than $229 million to Australian communities. The investment has supported literally thousands of important projects that would otherwise not have got off the ground. Ensuring healthy and vibrant communities is critical to our nation's success, and the community bank model demonstrates the deep connection we have with Australian communities nationwide and underpins our commitment to feed into their prosperity. Being based in the communities in which we serve continues to provide great insight into what customers and communities are seeking from their bank. And this close connection to our customers is a strength of our model, which we don't take for granted. The strength of our business is what will stand us in good stead as we reshape our business to be adaptive for the future needs, demands and aspirations of our customers. Our strategic imperatives of reducing complexity, investing in capability and telling our story are crystal clear, as is our commitment to our targeted outcomes of providing a seamless customer experience, lowering our cost base in the medium term, and continuing to deliver sustainable growth. We consistently rank as one of Australia's most trusted brands, are the top-rated company for customer experience, and have a Net Promoter Score over 30 points higher than the average of the major banks. A standout for the year has been our 4 times growth in net customers, taking us to over 1.7 million customers who have selected us as their bank of choice. Robert mentioned before, but other highlights during the year were the launch of Up, Australia's first and largest next-gen digital bank. Up has exceeded initial expectations of customer growth, attracting over 130,000 customers in the first 12 months since launch. And another highlight, the adoption of TikTok's instant home loan technology to become the first lender globally to offer a digital home loan application and assessment process under its own brand, and that's Bendigo Express. Partnering is in our DNA, and through our key strategic partnerships, we've developed these leading-edge innovative products which appeal to customers and potential customers in our priority key markets. We and our community partners have been testing new concept stores to continue our commitment to building a better customer experience. Our smart, retrofitted Norwood branch in South Australia has exceeded expectations with a 64% increase in foot traffic and a significant uplift in business. We recently launched a second concept store in Leichhardt, New South Wales, and will soon open another in Victoria. We've reviewed our organisational structure and we've undertaken a cultural review to ensure we have the capabilities, collaboration and discipline to continue to execute on our strategy. During the year, we handed back our rural bank licence to the regulator, with the entire Bendigo and Adelaide Bank now operating under the one licence. We commenced work required to do away with legacy platforms and to divest businesses like Bendigo Financial Planning to further simplify and de-risk our business, while also delivering cost savings. At the same time, we have been optimising our channel distribution network and have invested in additional relationship managers in step with our customer experience commitment. And we've introduced those across key priority markets, as well as expanding partnerships and white label opportunities. And for example, the renegotiation of our Elders distribution agreement, new arrangements with Aussie and Connective, our partnership with Swinburne University, and more recently announced partnership with CPA Australia for business banking. The success of attracting new customers, especially in the younger demographic, gives us an opportunity to foster lifelong customer relationships. And this is important as we accelerate the digitisation of our offerings and focus on the priority markets where we have a clear competitive advantage. Establishing and fostering lasting relationships with this younger demographic will deliver long-term growth opportunities. The trust in our brand and our people is what has set us apart. And it is a deep sense of purpose and strong set of values which has stayed central to our culture and is entrenched in the way that we do business. As we accelerate our strategy and reshape our business for the future, we continue to focus on the markets where we see the best opportunity for our relationship-based style of banking and where trust and authentic relationships are most valued. My leadership team and I are committed to reshaping our business and sustainably lowering our cost base so that we can continue to deliver sustainable growth and shareholder returns. I'm extremely proud to lead this organisation, an organisation with both capability and heart, embodying strong values and a commitment to always act in the customer's best interests. An organisation that understands the privileged role that we play in the community. Our chairman has played an important role in setting the tone of the organisation, and today we say farewell and thank you to you, Robert. A director of our bank for more than 3 decades and chair for the past 13, you have given so much to our organisation and we have all benefited from your foresight and your strong and courageous leadership. You leave a wonderful legacy, an enduring legacy, and I wish you all the very best in your retirement. I welcome our new chair, Jackie Hay, and I look forward to working closely with you, Jackie, to cement our position as Australia's bank of choice. In closing, I'd also like to thank my team, our 7,500 staff Australia-wide, who do an amazing job and go above and beyond to provide our customers with the best experience in banking. I'd like to thank the board for your ongoing guidance and support. I'd like to thank every single customer for your advocacy and the opportunity to provide us to do business with you and support your community. To our partners and suppliers for the support, expertise and knowledge you provide our business. And to you, our shareholders, for providing us with the capital to make it all happen. So thank you for your time today.
Thanks, Barney. So, questions. If anyone's got any questions they'd like to ask, now's the time. There are 2 microphones. Could you approach them if you do have a question, and you'll be introduced by Alan or Jana. Do we have any? They're over that side, Jana. Alan.
I have a question from a shareholder, Philip Sweeney from Torquay.
Mr. Sweeney.
Thank you. Firstly, I'd like to say what a pleasure it was to travel up to this lovely town of Bendigo and not have to go to another capital city for an AGM. So well done that. So, and also I should congratulate the chairman for surviving the Royal Commission when other chairmen and chair ladies fell on their swords. So must be an indication that Bendigo Bank are doing something right. So well done, Chairman, on your final term of office. So thank you. Now, I'd like to pick up on some questions that Marnie mentioned before. And I wanted to sort of focus on bank closures is one of the topics I've got here to talk about. If I can just find my notes in a minute. Because I know there's an article that came out in the paper just last week that says we're fed up with the banks and the customers of the Big Four would like to leave. So as I see it, there's a huge opportunity for Bendigo Bank to capitalise on the disgruntlement of most customers with large banks. And I know over the last 4 years, there was something like 700 branches have been closed by the Big Four. And I noticed that Bendigo Bank has closed 6 or so in the last year. So I would be expecting Bendigo Bank to be perhaps capitalising on that by opening more branches where the Big Four are deserting, especially in country areas. And I was wondering, do you keep a database of all the branches that have been closed by the Big Four and perhaps looking to cherry pick areas where Bendigo Bank could fill the void? Because to me, it seems there's a huge opportunity that Bendigo Bank should be looking to capitalise on.
Thank you.
Some comments, please.
Thank you very much, Mr. Sweeney. So distribution for banking is, of course, a big topic. Very few people these days do their banking at a branch. We all use, as I said, internet, mobile phone, the old days of transaction-intensive branches have finished. So branches, if they're going to be useful, have to be useful for other things than the things they used to be. There's just not our customers, you're not using them anymore. So there's no point having empty buildings scattered around the countryside. But physical distribution, the ability to go to somewhere when you really need it, is still seen to be a crucial part of that relationship between a bank and its customers. So, no, we're not looking to wholesale close branches. We certainly do work to ensure that if there are opportunities in regional or other areas that we look to whether that there's a business opportunity for us, absolutely. But on the other hand, we're not going to swim against the tide when everyone's still using their mobile phones to access the branches or access banking. So that's the position. You saw some of the solutions that we're trying out. The branch at Norwood's a whole new way of thinking about it, but so is Upbank, the digital world, as a way of dealing with our customers. So that will go on. we're certainly not, as I say, looking to just shut down wholesale branches, but branches need to be sustainable businesses too. And for them to be sustainable for us and for our community bank partners, they've got to do things differently in different ways than. So you'll see a lot of change over the next period. Okay. Next question.
Thank you.
Over here, Jonah.
Mr Chairman, I've got Paul Fanning, who's a shareholder from Bulla.
Thank you, Robert, and thank you, Marnie, for your addresses. And Robert, you must feel so elated and thinking, well, who'll take over and how will my role evolve in future years? But as a chair, I guess you could almost write a book.
I'll miss my annual meeting and discussion with you.
Well, not quite, but over the longevity of your chair's role. Now, look, I have a couple of questions. That was an interesting question before about the number of bank closures, and there was another Tier 2 bank that tabled results just this week, and the number of bank branches, they have reduced in number, both as a community model and corporate model. I won't touch on that anymore, but I would like to put to you and the board, given that probably NIM is going to be reduced or going to be very static over the next 12, 18 months, your operating expenses probably, the expense ratio will probably be trending 59, 60%. Are you thinking of a merger or synergy with another tier 2 bank?
Mr. Fanning,
Well,
you've been coming to these meetings long enough to know that this is not the place, or we're not going to entertain that sort of discussion here. But the history of this organisation has been that mergers and acquisitions have been very much part of how we've been able to grow. For us, it's presented new opportunities in new areas, but most of our growth has come through our ability in those places to generate new business. And I'm sure that's the way. Now, whether you need to do M&A these days, trouble with mergers and acquisitions in financial services now is, of course, that you end up with such huge, expensive legacy systems. It just adds complication. And if everyone is dealing with you through digital banks, why do you need to do, what is the value of established systems when everyone's going to what are fundamentally inexpensive new systems? That's the dilemma I think everyone has in these. All right, next question. Alan.
Yes, Mr Chairman. We have a question from Melissa Abel, a proxy shareholder from Bendigo.
Hi, Chairman. Last year you were asked about the bank's support for the Paris Agreement on climate change and gave a very equivocal answer, failing to actually say one way or the other whether the bank supports this agreement and its goals. Has the board actually formed a position specifically on whether Bendigo Bank supports the Paris Agreement's goal of holding global warming to well below 2 degrees and pursuing efforts to limit global warming to 1.5 degrees?
Look, I might, given this is all about the future, I mean, we as an organisation have been committed to doing our best to reduce our footprint for a long time. This building, we collect the water, we reuse the water. It's a pretty efficient use of energy kind of. So all across our network, we really take this stuff very seriously. But I think it's probably better I let the next generation, as it were, talk about our position in relation to those things.
So thank you for your question. I think, as Robert has said, we are doing many impressive things across our entire network and our own impact. We're also doing some work more broadly, because what we perhaps haven't done is talk well enough about what we are in fact doing. So therefore, as shareholders, you're not getting the full picture. So there is work going on at the moment in terms of our approach to climate more generally going forward. And I do hope you'll, this time next year, see something a little bit more transparent about that. We're very conscious of it. We understand it's a hugely important issue, and work will continue on in that vein, and you'll hear a little bit more transparently about what we're doing going forward.
Sure, thank you. So
Can I
does
have
it mean that the bank
I'm
supports...
sorry, one question. Next question.
Thanks, Mr. Chairman. We've got David Scanlon, who's a shareholder from the FSU.
Good morning. You should be very proud of your history, and you should be very proud of your organisation and where you've come to at this point in time. You should also be very proud of your staff. They are the hard-working and dedicated staff, and they are the backbone of this company. Your annual review states that you have an ongoing commitment, and I'm quoting, ongoing commitment to put our people first so they can put our customers first. Given that the minimum wage increased by 3% in July, that the RBA Governor publicly stated that there should be wage increases of 3% or more, given that your market, Bendigo and Adelaide Bank, is a competitor to the Big Four, that the Big Four and other financial organisations have committed to giving their staff wage increases of 3% or more, and yet you are proposing only a 2.5% increase over the next 3 years in a new enterprise agreement. How are you going to deal with the fallout and backlash from staff and customers, considering that you said you had a commitment to put them first?
Every dollar we deal with, in a sense, there's a contest between the different stakeholder groups. And we've already, people have been talking about the squeezes on income, and so this is an ongoing discussion and issue. We are committed to our staff and to ensuring fair outcomes, but as has already been reflected, this business, the whole banking industry, is in turmoil as it deals with all these new technologies. So we're very conscious of those issues, and we're certainly committed to dealing fairly with our staff.
And they
Thank you.
deserve more than they are being offered. So
Next question. Thank you.
Mr. Chairman, we have Craig Caulfield, a shareholder from Maroochy River.
Mr. Caulfield.
Hello, Mr. Johansson. Craig Caulfield. I'm a founder of Bank Warriors, and I'm also an advisor to Bank Reform Now. Between us, we have more than 14,000 members and followers. We do have concerns regarding mostly legacy cases, and there's a lot of talk about the future, and I congratulate you on the future direction that you're taking. I think there's some great things, your capital management, your digital future, the way the industry is transforming. But people are falling between the cracks, and Bendigo Bank and Rural Bank has failed to address a lot of these. We've worked with several banks, all the 4 major banks, and we work constructively together, despite having our criticisms. And there's a range of things that we would like to work with Bendigo Bank on too, and I want to see if you're prepared to work with us as a board, as directors and at management. These things include Bendigo Bank undertaking to act as model litigants, so that in the event that you're in any legal disputes with the customer, that there's a set of fairness principles that you follow. 2, you've conducted the APRA prudential report. You're talking of trust and authenticity. If there's that much trust and authenticity, please publish it. Will you publish it? Thirdly, you have a bear map. That's a new requirement from APRA. What we find as customers that are falling through the cracks is it's very hard to identify the person we should be dealing with. Some of us have dealt with, a dozen different case managers over the years. Will you publish your bear map? The banking and finance oath is an oath that many in the finance industry that, hold themselves up high sign up to. I looked for the number of employees, managers, etc. from Bendigo Bank, and I couldn't find many. Will you circulate the banking and finance oath to your members? It's not compulsory, but just to recommend, that we would make this undertaking to the banking and finance oath. I would have thought at a very high senior level, perhaps at those that are on the bear maps, that would be, you could consider making that compulsory. Political donations. You know, can you add to your constitution that you'll ban making political donations? The auditors, there's a big debate around auditors at the moment. We would like to see a clear separation between the auditor and auditors performing other consulting taxation duties. And the Code of Banking Conduct, that's not the Bendigo Code, but the ABA Code, previously used to have a requirement to act honestly. That has been removed from the code. Marnie Baker, I noticed that you're a member of the council. Could you take to the ABA a requirement to put back into the code to act honestly? One final thing, I couldn't find references to customer advocate. I saw customer advocacy, but not the customer advocate inside your annual report. CBA, for example, lists a lot of the metrics around number of cases, number resolved, number put up last year, number put up this year. The impression I get reading Bendigo's is a lot of that metrics is hidden. Thank you.
Thank you. That's quite a list. But in a way, they all go to this underlying issue of the things I was trying to talk about in my speech. I'm not going to go through the individual lists, but just to pick two. I mean, the whole point of the review of the internal governance processes, we thought was that you could have this full, frank, open discussion where people knew that to ensure that there was anonymity if people wanted to say things. So I think the public display that's gone on with some of the fairly sanitised reviews that have come out of that APRA review have been less useful than they would have been had they actually been hard-edged documents that were actually relied upon internally.
I would say the National Bank Review was hard-edged.
So I'm not going to go through all that list of things. They're all things that we think about.
I have come down from Queensland, my wife and I. We've travelled a long way. You talk in the annual report about being very open, and you've said it. And now that I'm here, you're saying, no, there's certain things you're not going to address. That's not...
No, well, what I'm saying is I don't agree with the solutions that you've prescribed for us necessarily. So a number of them... So, for example, we don't make political donations. The bare map, I'm not sure where that's up to or whether that's... Is that a public? Customer advocate, we have a very active customer, and is she around? I'll have her meet you if you like.
That'd be great.
Because our customer advocacy process is, I think, a very effective one, and indeed in many of the areas, such as the elder abuse part of that area, we've actually been doing that for years, and others are trying to pick up on our experience. So these are all matters that we are dealing with as part of this general underlying issue of ensuring our continued role and trust in the community. So
could I simply ask you as a board then to consider those issues in more detail?
Absolutely.
Thank you.
Jana.
Thanks, Mr. Chairman. We've got Michael Sanderson, who's a proxy from Catamatite.
That's the metropolis of Catamatite, population 300. This goes to the makeup of the board. It probably doesn't relate so much to David and Marnie, and an ex-cocky. Gee, massive. As an ex-cocky, you'd be a unique beast. Kenneth Hayne commented in his only public appearance since the Financial Services Royal Commission that the reason we are having so many Royal Commissions is that the administrative, judicial and legislative sectors are not fit for purpose, or words to that effect. Ken Henry, who came to NAB from the administrative sector, stated at the last year's NAB AGM that boards have a limited pool from which to draw their members. We see cross-pollination between the banks and the legislative sector. For instance, Mike Baird and Malcolm Turnbull. As for the judicial sector, they too are well represented on bank boards. Like the administrative, judicial, and legislative sectors, bank boards across the FSP sector have shown themselves not to be fit for purpose. And this has been the case for many years. There is a pool that boards seem reluctant to draw their members from, and that is their own banks. The only reason the Commonwealth Bank, Catherine Liverson, could give was this was a philosophical approach. My question is, why is there so much resistance from banks populating a significant number of their boards with staff-nominated members from within?
I think, well, I thought you were going to tell us that we didn't have a diverse enough board, and I was rehearsing in my mind an answer about where this board comes from and how broadly based it is in skills, background, experience and all those things. But we do have people who actually have worked on banks, in banks. But I think you're suggesting, are you, that staff should have the capacity to nominate a board member? That would be, I think, and there are other jurisdictions around the world where that sort of system happens. I think in Germany there's a process where at least some of the board, and they have tiered structures in boards, some of those boards have a requirement that certain numbers of employee nominees and things. So the role of boards is hard enough, and what you want is to ensure that people who are on boards are separate enough from the day-to-day activities of what goes on in the organisation to be able to, as it were, adjudicate on that contest as to where the marginal dollars are spent. So I think that's one good reason why in the Australian structure we don't allow or don't look for employees to have nominees. But that's not to say that employees aren't heard or aren't part of the process. Our board meetings, we do have periods in our board meetings where it's only non-executive directors. But for the most time, executives are involved in board meetings and those discussions, because that's how we as non-executives actually learn about what's going on. So that's my answer to your question. We're not proposing to change our board structure in that way. I don't think it would be a sound outcome, and I think we hear and have plenty of opportunity to hear from our employees at that level. Next question.
Can I just make one
No,
comment?
I think that's enough. We've got a lot of people lined up.
Fair enough.
I need to keep moving. Alan?
Mr Chairman, we have a question from Damien Warren, a shareholder from McLaren Vale.
Mr Warren.
Hi, how you going? Directed to Robert Johansson and to probably Marnie Baker. In paragraph 5 of your last letter, you're talking about 2008 and the GFC and also the inappropriate investments. Would you be looking at Great Southern as being a major part of that?
Well,
hang on, I haven't finished yet. Because I have in my possession evidence, 2 from Bendigo Bank employees and 2 from the liquidators from Great Southern, that said the scheme did not commence, the documents that needed to start the scheme cannot be located, and effectively there is no drawdown between $100 and $300 million worth of loans. Now, I know this has all gone through the class action. All that information wasn't supplied, as far as I'm aware, to the class action. And finally, there was another affidavit from an employee after that case that said when you purchased the loans, you did not look at the primary documentation when you purchased those loans.
I'm not going to, you won't be surprised, but I'm not going to argue the details of the question of Great Southern. This has been through the courts numbers of times. You asked the first question. I mean, I don't think any of us would, again, want to revisit that the legislative scheme that was set up for agribusiness investments.
Yep.
I mean, funders, investors, Parliament wouldn't do that again. So that's, you know, I think that, but I'm not going to enter in, I'm not going to discuss individual things about those cases, which, as I say, have been well litigated now.
Yeah, well, I don't believe that half the information was and the evidence was ever put on file when they went through those law cases, and I have them.
Jana, can I, next question?
Sure, thanks, Mr. Chairman. We've got Milton Wild, who's a shareholder from Melbourne.
Mr. Johansson, allow me to lighten the load a little bit, it appears. My question, which is made up of a couple of parts, is directed to you, Robert, Marnie Baker and Jackie Hay. I note recently that the Federal Court has stripped the Bendigo Bank of its right to misdescribe itself as a community bank. And as recently as last month, Bendigo Bank and Bendigo's Rural Bank have been singled out and litigated against by ASIC for the use of unfair contracts and misdescribed interest rates. In excess of 15,529 non-compliant loans between 2016 and 2019 alone, equating to 5,176 a year, 431 a month. That's more than 5 times the other banks identified by ASIC. A sad reflection of the systemic acts of bastardry under the Johansson, Hurst and now Baker leadership. ASIC have since been alerted to your unfair contracts, which predate 2016 by another 16 years, potentially another 84,000 non-compliant loans. I draw particular attention to one of the many documents identified by ASIC, that being your standard Memorandum of Common Provisions, which intentionally and deliberately empowers Bendigo Bank to engineer defaults where they do not exist and to then simply go through the motions of serving the default notice with the express intention of ensuring that the mortgagor does not receive that notice. What I'd like to know is, how does Bendigo Bank propose to redress the predatory actions taken by the past leadership under this oppressive regime? 1. 2, what will it cost us as shareholders? And directed to Mrs. Hay, are you going to right the wrongs of the Johansson, Hurst and Baker dynasty and provide redress for the past chairs and boards' abhorrent mistreatment of long-term customers of Bendigo and Rural Bank? And will you steer Bendigo in a proper and ethical direction when it comes to the treatment of small, medium enterprise and family customers?
Thank you, Mr. Wild. So community banks, it's true that the Court of First Instance said that we had no right to register a trademark in relation to community banks. It didn't say we couldn't call ourselves or our partners community banks.
No, but you have to
You've then raised a whole lot of issues about other litigation that's going on in relation to unfair contracts.
Yep.
That is, as you say, in front of the courts. These are contracts, terms of which were written some time ago.
And still exist.
Not under those terms.
When were they changed?
Some time ago.
Okay.
And that process is currently before the courts and is under discussion. So we're not going to ventilate those matters now. I think that's enough to say at this stage. Marnie, do you want to?
I would like to actually just say something just in relation to those contracts that we haven't had the opportunity to say, I suppose, in the public. And we are working and have been actually working with the regulator in relation to changing those clauses because they are so open-ended, and we recognise that. But it's also, whenever you do look at anything from a litigious context, you need to take into account the culture of an organisation as well. And we can look back in relation to the contracts that we're going through the court about at the moment, and can feel quite comfortable to say the only times that those clauses have been enacted for borrowers has been to enable the reduction of an interest rate or the waiver of a fee for the borrower. So to reinstate those borrowers would mean that they would be disadvantaged borrowers. So there's a lot more detail behind this that we're working through with the regulator at the moment.
Marty, you know that's false.
Thanks, Marty. Thank you, Mr. Wild. Alan, can we...
I'm waiting on Mrs Hayes' answer, please.
Mr. Chairman,
do you
we
want
have a
to
question.
do you want to say something, Jackie?
Sure. Look, I think Robert and Marnie have covered it. More than happy to have a chat to you afterwards. What I would say going forward is that this organisation, hand on heart, genuinely tries to do the right thing. And if we find instances where we've done the wrong thing, we do our best to correct them. I'm very happy to talk to you afterwards, but I have full confidence in Marnie, and I've had full confidence in Robert, the board and this company for many, many years, and I hope we'll continue to deal in an open, transparent and genuine way going forward.
It's been 8 years,
Alan,
but I'd be happy to
can
talk.
you... Next question.
Yes. Mr. Chairman, we have a question from Ralph Moran, a shareholder from Strathdale.
Right. I'd rather make 3 quick points if you'd allow me, but I'll try. First, your reference to using our phones instead of the shop fronts. You have to wait a minimum average of over half an hour on the phone to get through to anybody in the bank, a person. The other one, I know we have to be nimble, you have to be nimble with interest rates, but it's awfully hard to find out what the interest rate is at the time of month. It pops up on statements every now and then, but it's out of context, it's not highlighted, it's hard to find. What was my third one? Oh, yes. I insured a valuable household item recently through you and CGU. Since then, I've been definitively denied by both sides of the camp, and I'm with a claim, and I'd like to take it up with someone later.
Well, we'll take up that. We'll find someone to talk to you later. I think I'll just take those as comments. Next question.
Thanks, Mr. Chairman. I've got Simon Perrin, who's a shareholder from Bendigo.
Thank you, Mr. Chairman. My question, I think, is to you, but anyone on the board may wish to address it. Last week, I sent a copy of bank guarantee bond statements valuing a total of $5.9 million. Is it customary for the Bendigo and Adelaide Bank to provide unconditional bank guarantees to the value of $5.9 million to mining companies with considerably less negotiable assets?
I'm not going to discuss issues relating to individual customers, of course. But we do provide things like guarantees for bonds from time to time, but as part of our general credit policy, we will only do so where we're convinced that that exposure is able to be covered. And I think we're very comfortable about the position in relation to those sorts of products. Next question, Alan.
Mr. Chairman, we have a question from Eric Pascoe from the Australian Shareholder Association.
Good morning, Mr. Chairman. My name is Eric Pascoe and I'm proxy holder representing the Australian Shareholders Association. We're holding approximately 3 million proxy votes this morning, representing 440 shareholders. Mr. Johansson, I'd like to begin by thanking you for your outstanding contribution to Bendigo and Adelaide Bank over so many years. You've been an accomplished and very steady hand through a lot of difficult situations. We particularly like the fact that the Bendigo Bank seems to be part of your DNA, so have really appreciated that, and retail shareholders and indeed probably all stakeholders have benefited greatly from your leadership over the years, so thank you very much. Mr. Chairman, the future for shareholders in Bendigo and Adelaide Bank seems to have become a little riskier. We have a new leadership structure. That leadership is spending money and increasing costs while saying to us, trust us, this is the right way forward for the long term. With the added downward pressure on profits, shareholders could find themselves disadvantaged. What is the board's dividend policy going forward, especially over the next couple of years whilst this experiment plays out? Will you protect the dividend in anticipation of a future upturn in profits? I think, as you know, dividends are very, very important to mum and dad shareholders.
Yeah, I mean, we could easily decide that the current structure and processes that we've got are ideal and that they'll last for the next 50 years. If we decided that 10 years ago, we wouldn't be able to offer people, for example, ability to transact on their phones, not just by ringing someone up, but by actually... So we've got to continue to invest. And it's not us deciding this is desirable outcomes. This is what customers are requiring that we do. So it's not like we've got an option to run a bank that was with quill pens and parchment paper. We need to be, and we pretty well are, at the cutting edge of a lot of this stuff. And one of the strengths of this organisation has always been how prepared it's been to be innovative. We were the first to introduce Visa Card. We were one of the first to have an internet banking platform. It's 30 years since we established RFS, our processing systems. These were all, maybe you would think then, brave decisions at the time. But they're the reason we are where we are in the market and able to offer such a great proposition for customers. So no, if we go back into our shell, we haven't got a future. We've got to be able to make those investments, do it still from the base of this conservatively well-run, thoughtful organisation committed to working for customers and their communities. But those customers and communities, they don't want to deal with quill pens anymore. Next question.
Thanks, Mr. Chairman. I've got Norm West, who's a shareholder from Bendigo.
Good morning, Mr. Chairman. I'm going to set a precedent. I want to ask a question.
Mr. West.
And please don't knock the quill pen. It was way ahead of the old stylus. Just on behalf of the ASA, of which I was Eric's predecessor, and myself, thank you very much for the accessibility you have offered, the respect and the courtesy in a number of fairly divergent discussions, and it is appreciated. I'd also like to highlight your corporate memory, because you can go back, not as far as I can, but you go back a very long way, and I believe that corporate memory and corporate history is an important component in the culture of this bank, and it shouldn't be lost too suddenly. And the third thing, I'd just like to quote your own word. Whenever you wanted to squash a discussion, you always said, but we are very prudent bankers. So I thank you for that. It's kept Bendigo Bank out of a little bit of trouble recently. And just, if I may, after speaking about you, thank that fellow on your left, Bill Conlon, the now just about ex-company secretary, who has given us the same courtesy when the ASA wanted to have a discussion or information. He's been quite an asset. Thank you.
Thank you very much, Norm. Alan.
Mr. Chairman, we have a question from Selwyn Krepp, a shareholder from Flemington.
Good afternoon. I'm a shareholder of multiple parcels of shares. Obviously, I'm always in search and protection of future dividends and through best practices. My question is directed to you, Mr. Johannesson. At the Financial Services Royal Commission on the 29th of November last year, I saw you on TV being interviewed by ABC, where you were approached on camera by a highly dissatisfied borrower and client of Bendigo Bank. Have you resolved this client's dissension in full satisfaction? And if not, why not? And how many other customer complaints have been deferred to conveniently coincide with your departure, meaning more issues with potential remediation and compensation being possible in the future at the erosion of shareholder entitlements?
I'm not sure whether that's been finally sorted out to everyone's satisfaction, but I did ask about, it was a bit of a surprise, I must say, when I'd emerged from my grilling to have some other question put to me. We're not going to ventilate here individual instances. That's inappropriate. But we do and are committed to dealing with questions from consumers and customers as well as we can, and take those issues very seriously. Another question.
Thanks, Mr. Chairman. I've got Russell Patterson, who's a shareholder from West Gippsland.
Mr. Chairman, my question is about the Royal Commission. Has the bank implemented all the recommendations of the Royal Commission, knowing that the regional communities are suffering, and also is the bank assisting in other ways in these rural communities who are really doing it tough?
Well, we're certainly committed to the regional areas of Australia as being a crucial part of our business and part of the nation's fabric. I must say I'm not sure the answer to the exact list of every recommendation that came out of the Royal Commission, but we accepted those things very quickly. A lot of them actually didn't apply to our business. Do you want to, Will, give you a chance to be heard today? Your last chance.
Take it while you can. So we've put in place a program of work to deal with all of the Royal Commission recommendations that apply to us. Some of them, many of them, we're already compliant with. Some of them involve quite large programs of work to implement. For example, one of which is replacing the trustee of our super fund, which is also a trustee of all of our managed investment schemes. That's a significant piece of work. And we're working with the other members of the Australian Bankers Association and with the regulators. We're monitoring the federal government's timetable for implementation of all of the legislation, and we're on track to meet all of those deadlines.
Next question.
Mr. Chairman, we have a question from Rita Mazalevskis from Perth.
Good morning, Board, and good morning, shareholders. Firstly, can I just say I was in transit in the Sunshine Coast, and I ended up going into a community branch I actually went to the Maroochydore branch first to see if I could get an annual report. They said they don't have them, they don't give them out. So they directed me to the community branch at Budrum. I'm not local, sorry if I said that wrong. And they didn't have one either. And after much grilling, I was asked why I wanted it, what I wanted it for, am I attending the AGM, why can't I print it myself, and it'll cost too much. Double-sided, it's 140 pages, $10, 8 cents a sheet. And then I come into this building and I've been questioned over wanting a report. So I would just like to raise that with you because...
I thought they were all out on the...
No, I was in Sunshine Coast wanting to read it in preparation for today. So I thought I would just note that because I found that extremely unhelpful as a customer. I am a customer.
But they are available on the website.
Yeah, but a lot of the demographic of the customers are older. They're not computer literate. They have to have the opportunity to have a printed out report. There's no law that says you can't have one.
I think we do actually provide them if people ask for them.
Yeah, well, I had to go into 2 and there were none, and then I was told I couldn't have a printout. Anyway, I just wanted to raise that just so that you know for future, that's all. Because I think for, people that don't have the ability to print it, it's not fair on them. I am a Bendigo Adelaide customer. I'm also a shareholder, but I'm also an aggrieved customer. I just want to raise, with the interim report last year on the 28th September 18, you provided a response to the Financial Services Royal Commission. And in that, I'm only going to touch on a few points because it was quite extensive. And in that you say that from our perspective, we believe that the community expects that banks will strive to act honestly and fairly, listen to customers and respond to their needs, act for the long-term benefit of community, derive a fair return on the shareholder capital provided by the community. In seeking to deliver on those expectations, banks should aim to meet the following standards. And amongst those, you say protect customers from unfair terms and conditions and fees, assist customers when they are in difficult times and take account of individual circumstances, including unforeseen hardship, and also continually working to protect customers from fraud and increasingly cyber crimes. Sorry.
Do you disagree with some of that?
No, I just have it. No, just let me finish. Sorry. Then it goes on to say, of course, we do not always meet the community's expectation, but we endeavour to do so. We also acknowledge that the Commission has identified areas where we need to improve. I then happened to come across a report through the Royal Commission by the ISS. If people don't know who the ISS are, it's the Institutional Shareholder Services, and they are a governance advisory service. And in their report, they say that there's a report re Bendigo's key takeaways for the annual report 2018. It does state that the company admitted to the Commission that it had mishandled an episode of fraud, overcharged fees, underpaid interest, and inappropriately handled a number of loans to drought and flood-affected Queensland cattle farmers and overcharged thousands of customers for agricultural products. So now that you come under BEAR, which is the Banking Executive Accountability Regime, if people aren't aware of that, I wanted to know if you have figures of how many breaches have been reported to APRA through these admissions of failures of Bendigo Bank, because also in the ISS report, there's a quality score. And under governance, it says that the quality score for Bendigo Bank is red at an 8, and the board structure is red at a 9. So as a shareholder and as customers, I would find that quite concerning. I just wanted to know what your views are on that.
Well, on all the statement about what we see our role in the community is, I think you're not disagreeing with. On the instances of when we went back and looked at everything, we came up with mistakes, and that was all led through and discussed at the Royal Commission. So I'm not, that's there. The ISS things, Tony, can you?
Yes, the ISS is the proxy advisor to a lot of the institutional shareholders, and they're not my favourite of them, not least because they have very different views to us. And a simple illustration of that is that they don't like anything in long-term incentives other than total shareholder return. So we say that an overemphasis in remuneration on total shareholder return is one of the core problems for the banking industry. That if you just strive to reward executives for the outcome for one group of stakeholders, being shareholders, it does create problems. And that's particularly true with the weighting into STIs, into the short-term incentive programs. If it's just about an individual's performance that they're completely in control of, they'll pull levers that cause them to earn that money, and it can have adverse consequences on other stakeholder groups. Yeah. They like all of those sorts of things. So there's differences between their views and ours. Another illustration is term. we think duration on a board is important, and the point that was made before about Robert's term on the board we see as incredibly important, and Robert leaving takes a large lump of the organisational's corporate memory out of the organisation and creates a risk to shareholders. They see that sort of duration as a problem. They see David Matthews' involvement in the community banking network, which he was one of the driving minds of. They see that as a negative and say that he should not be on the board because of that. They vote against or recommend voting against in those instances. So there's lots of things where we disagree. We understand their mark, we look at it, we think about it, but we don't agree with a lot of their judgments.
Yeah.
We think that they've got a very distorted view on some issues.
It might be distorted, but it actually is an evidence document that's part of the Royal Commission and available to the public. So that's why I've brought it up.
I think this is going on quite a long time.
It's actually not. It's once a year we get to talk before the board. And I realise it's your last one, but you have been here for 30 years, which they classify as an excessive tenure. And with all the misconducts and everything that have happened over the years, they've been under your watch. So it is actually very critical to talk about it because it's not talked about or reported in the annual report. And shareholders need to be aware because their shareholding percentage is down because of what has happened. I mean, remediation, I think in 2018 was only, got my figures somewhere, 0.5 million, and this year we're looking at 16 point something million. That's a horrendous jump. Horrendous. So what will it be next year and the year after and the year after as a fallout of the GFC, which you were part of because you were still here. So to me, I'm sorry, I have to hold you accountable because I am a victim of the bank. Thank you.
Thank you. Next question.
Mr Chairman, I actually have some shareholders who've previously asked a question who would like to ask. Are you
I'm
to address?
what the meeting thinks. I'm inclined to move on into the business of the... So...
Might I just mention at the Commonwealth Bank shareholders meeting, Catherine Livingston was able to allow people to ask up to 5 questions each. So why are we limited to 1 question here? Why are people being shut down when we have important things to say, and important things could actually assist the board and the current management team improve this bank? So I think we'd like an answer to that. Why are we being shut down?
I'm not trying to shut down anyone, but I'm also trying to keep this meeting moving so that it's not just, as it were, captured by a few people against the will of most of the people here. Can we, how about do this? I'll try and, for another 10 minutes, we'll try and deal if you can make your points very quickly, and I'm expecting they're not just a repeat or rehash of points that have already been made. And perhaps you can just say them quickly, and then I'll try and deal with them as a group. So let's do that. Jana?
Thanks, Mr Chairman. I've got Milton Wild again, who was a shareholder.
Wild, you got some quick point to make?
Very quick point. I won't rehash my grievance with Bendigo. We'll deal with that later. Thank you, Jackie. Is it the board's expectation that Bendigo Bank will participate in the first home loan deposit scheme, which commences on the 1st of Jan 2020?
Yes.
Next
Is
question.
that been confirmed?
No. We are working with the government in relation to that.
Next question.
Mr Chairman, we have Philip Sweeney, a shareholder from Torquay.
Thank you, Chairman. Quite a different topic this time. This is on superannuation, which has become quite topical since the Hale Royal Commission, because people are leaving the bank-aligned for-profit super funds and moving across to union-aligned not-for-profit funds. Now, this follows on a question of Catherine Livingston allowed me to ask at the Commonwealth Bank AGM. I pointed out the Commonwealth Bank operates one of the best-performing superannuation funds as well as one of the worst. Now, the best fund is their staff fund. So
what's the question?
That brings me across, what are the arrangements that Bendigo Bank has for its staff? Does it still have its own standalone not-for-profit super fund, or is there some other arrangement for staff?
Tony, do you want to?
Yes, the organisation does have a staff superannuation fund, but it also has 2 retail funds, and they're both My Super funds, so they're low cost. They're benchmarked each year to establish their competitive position, and they are ranking in the top quartile from my memory. They're ranking in the top quartile.
but they're for-profit funds.
Well, yes, that's right. They are. They are for-profit funds.
Next question.
Mr. Chairman, we have a question from Melissa Abel from Bendigo.
Thank you. Has the bank conducted scenario analysis on the impacts of increasing weather and climate effects? If so, where can shareholders find this information? Is it public? And if not, how are we supposed to know whether our credit risk exposure to the agriculture sector is safe?
We have. It's not public. Perhaps you can talk to Alex Garpman after this meeting. Next question.
Thanks, Mr. Chairman. I've got Michael Sanderson, who's a proxy from Catamatai.
Quick question. This is a bit of an unusual one. It goes to powder customers, but when things go wrong. There are many instances where a bank customer, particularly farmers and SMEs, require additional credit to maintain viability, say to plant a crop or fertilise a crop, but are refused for a seemingly no logical or commercial reason, forcing that business into avoidable receivership. The banks, before, during receivership, will issue the customer additional credit to pay for the bank's...
What's the question?
I'm getting to it. Will issue additional credit to pay for the bank's legal and other onerous costs. It is perverse that the banks will not issue credit to their customer to maintain a viable business, yet will issue credit to that same customer liberally to pay for the bank's lawyers and other henchmen to bludgeon and asset strip the customer. Many banks say they observe model litigant principles. How can this be the case when a bank customer, rightly or wrongly, I'm not suggesting...
I think you're arguing. Can I...
Well, the questions are, how does this benefit the customer, the economy, the bank and the shareholder? And as part of model litigant principles, would Bendigo agree to fund their customers' defence in the same way as the customers fund the banks?
We understand when we're dealing particularly with agribusiness customers that this is not a 12 or 24-month deal. This has got to be a generational sort of relationship, and that's the way we try and conduct ourselves. Next question.
Mr. Chairman, we have Craig Caulfield from Maroochy River.
Thank you, Chairman. A brief comment and a brief question. My comment is, I'm not sure that the way you're conducting the question is compliant with the spirit of the ASX Corporate Governance Council's principles 2019. We just feel we're being shut down too quickly. I've got several questions, but I'll only ask one, given that has Bendigo Bank made a provision if the government makes any change to the bank levy? Not increasing the bank levy, they've already stated that they won't, but they may change the mix. Bendigo is the 5th largest bank. Macquarie has been levied and they're the 9th largest bank.
Well, we haven't made a provision in our accounts, if that's what you're asking. Do we understand that the change in that is possible? Of course. Next
Shouldn't
question.
that be declared in the annual report as a risk?
Well, I mean, governments could impose new taxes. I mean, we're not looking to ventilate every possibility for the change in tax systems around the world.
Not every. This is a very specific levy on the bank, so I think that's quite disingenuous. You're dismissing...
Well, I'm not trying to be disingenuous. I'm just trying to answer the question. It doesn't apply to us now. Could it apply?
Do you think it's a risk?
Is there a risk that governments will change their policy on these things? I guess, yeah.
That's too dismissive. I'm talking about the bank levy, not these things.
That's exactly what I'm talking about.
The bank levy.
Next question.
Mr. Chairman, we have another question from Rita Mazalevskis.
Thank you. This is for the board. This year you had an external consultant engaged to undertake independent assessment of the board. And this included an assessment of the tone at the top, which included that the board dedicated an appropriate level of attention to governance and management of non-financial risk. Just for people in the room that aren't aware, non-financial risk is what we fall under, which is where we're aggrieved against the bank because something has happened. Now, there seems to be a failure of mentioning of non-financial risk within the annual report compared to the Big Four. So I just thought I'd let you know if you want to be compared with them as the 5th fabulous bank, that that you should actually put some more in there about non-financial risk because it's critical.
Jan, do you want to? Sorry.
Can I just finish my question, please? Thank you. So, as a result of this, areas for improvement identified included greater clarity and formality in relation to referrals of matters between committees and between the board and committees, and where responsibility sits when referrals are made. To me, that means that you feel that you need to do better as a board. I know that there are subcommittees. All of you separate your roles over the subcommittees, but then you come together in the main committee. I've worked in the board arena. I know how this works. I don't understand how you don't have the information and you don't have the right information for the decisions that you made, the reporting that you do. There seems to be a critical failure here. Yet in your annual report, the base fee for the non-executive director has gone up 2% this year.
There's not a critical failure.
It actually is, because you had an independent report telling you that you need to work better as a board.
Well, of course.
You're not cohesive.
I don't think it says that.
No, I'm saying that.
Yeah. Well, we are cohesive. Committees and boards all have particular tasks. The question is asked is whether the particular responsibilities of individual committees are, for example, the Technology Committee deals with all sorts of technological risks. To what extent should the Risk Committee, when it's thinking about operational risk, deal with issues as well? It's that sort of discussion that was being raised. Of course, as jobs change, as people change, of course we need to constantly work on how we do our jobs to ensure that we're doing as well as we can. And of course we, from time to time, know that we need to work on those things to improve. And that's what we're doing.
Yeah, and Marnie's the managing director and she takes her direction from you at the top and the board, your fellow directors, and it just seems that the board isn't doing its job.
With respect, that is simply not true.
Properly.
That's not true.
Okay.
This has been an outstanding board and I'm happy as I leave to say that this is one of the really outstanding boards in corporate Australia.
I can only go by Financial Royal Commission evidence and your annual report.
Thank you. Next question.
Mr. Chairman, I have another question from Philip Sweeney from Torquay.
Thank you, Chairman. On another topic.
This is a third.
I haven't got to 5 yet. I've been reading your annual review, and of course it's full of very good news, so congratulations on the board and executives that there is so much good news. But you should also be prepared to publish some bad news in this review. And one of the most important things is how many complaints have you had from customers during the year? How many of these have been able to be resolved internally in the internal complaints resolution system? How many had to go to AFCA, the external complaint resolution system? And how many then had to end up in court to get some resolution? So I think it's important to be able to put some bad news in this and have some ongoing statistics, because surely the objective of the board and the executive should be to try and reduce those number of complaints year by year. So I'd like some feedback, please, on would you be prepared to put those statistics in the next annual review, please?
Yes, more than prepared to actually put it in there. That information actually is publicly available and we can provide that to you. It wasn't in this annual review. There was nothing behind the fact that it wasn't in the annual review. And like I said, we're more than happy to provide more disclosure around that.
Thank you. I appreciate that.
Okay.
Thanks, Mr. Chairman. I have a further question from Paul Fanning, who's a shareholder from Bulla.
Mr. Fanning.
Thank you, Robert. And this question I will probably direct to yourself, to Marnie, and also to Travis Krause, the Chief Financial Officer. Page 17 of the annual report, your consumer division. Cash NPAT down 45.3 million, 271.7 million. I'd like to know why that figure has fallen considerably. It would appear embedded in there, maybe an underlying level, there were remediation and redundancy costs. If so, what were they? Are there any projections on the future of increased remediation and redundancy costs, given that all the tier one banks have actually announced top-up figures in recent weeks. I think this is a very important issue. Thank you.
Yes, Paul, it does relate to remediation, which was disclosed in our annual results. So there's full disclosure there relating to $16 million of remediation costs. Remediation itself, we take a very conservative view in relation to any remediation. They were self-disclosed items relating predominantly to two parts. One was in relation to the advice, our advice business at the time, Bendigo Financial Planning, which we've since sold. But we took a conservative view that if someone we couldn't find the documentation that a review had been undertaken, and we'd actually had charged for that, we refunded that amount. The other part just related to a lot of different things relating to products, terms and conditions. As we actually work through as an organisation, this is an ongoing thing. Remediation used to be just called errors, and it was part of different parts of the lines within your P&L, within your profit and loss. Now it's actually being drawn out, so you can actually see that, and that's a good thing. I think so that it does provide more disclosure. So I think there will be forever and a day remediation, because it's just when you find things that you actually haven't done well as an organisation, and you look to remediate those to ensure that your customers aren't put at a disadvantage. We don't foresee we can't foresee what that may be for the future, because they are just a part of business as usual, and as those things are drawn to our attention, or we find them as ourselves, like we have done this year with the $16 million, we will remediate those things.
Can I have the next? I think that's enough, Paul. Are we done? Thank you all, ladies and gentlemen. We do. I'm not trying to shut off debate. I mean, far from it. But I think we do want to be able to move on into the business of the meeting. All right. Now we'll move to the first item of business, and I'm going to hand over to the Chair of the Audit Committee, Rob.
Thank you, Robert, and good morning, everybody. Or good afternoon, I should say. The annual report's made available to shareholders through a variety of sources. Under the Corporations Act, the board is responsible for the preparation and approval of the financial report. Our external auditors, Ernst & Young, issued an unqualified opinion on the annual financial report. There's no requirement for a shareholder vote on this matter, and hence I propose that the 2019 annual report be taken as read. There are opportunities, however, to ask questions on the annual financial report. And now I'll first turn to the opportunity for shareholders to ask questions of our auditors, Ernst & Young. There is an opportunity to send written questions to Ernst & Young, and we have received no written questions. Mr. Graham McKenzie and Luke Slater from Ernst & Young at the front here, who are the joint signing partners responsible for the 2009 external audit, are both here and are ready to answer any questions from shareholders about the audit of the annual report. Are there any questions of Ernst & Young?
Yes, Robert. We have a question from Philip Sweeney, a shareholder from Torquay.
Yes, Philip.
Yes, thank you. It's just some clarifications on what might appear to be an inconsistency in the financial statements. I refer to page 74. It says the group considers that default has occurred and classifies the financial asset as impaired if it is more than 90 days past due. Then we go to page 97 and it says loans and receivables which are more than 90 days past due are not classified as impaired assets when the estimated net realisable value of the collateral and assets is estimated to be sufficient to cover repayments of principal, interest and amounts due. So there just seems to be a bit of inconsistency there, which I think is worthy of clarification,
Yeah,
please.
let me explain that. And that's a question really for the company because it relates to the accounting policies, so I won't ask the auditors to comment. What we're saying is once it gets over 90 days, that prompts us to look at the recoverability of that loan. When you look at the recoverability of a loan, there are a range of things you will take into account. An agricultural loan, perhaps, when they've had a difficult season, but you're still supporting them, and you think the cash flows are more than enough to generate repayment of that loan in the future. A company that may have assets far in excess in terms of the security value of the loan, or a home for that matter. And so we assess the security value and other things that might be available before we make provision. So that's all that distinction is drawing. The distinction between what's flagged as something we should look at compared to what we should make a provision for.
Okay, thank you. Another question for the auditors. This relates to, there's a current inquiry in the Parliament about auditing in Australia, and one of the issues there is conflict of interest between the audit firms who both do the audit and also provide additional management consulting services to the company. So I'd appreciate any comment from the auditors as whether they perceive any conflict of interest at the moment in the work they do, or their company, Ernst & Young or EY, with Bendigo Bank. So comments there, please.
You clearly learned from the previous session where you nipped in with your second question very quickly. Look, I will ask the auditors to comment on that. It's a very legitimate question of the auditors, particularly in this environment. But it's also something that the chair of the audit committee and the board need to focus on. It's our primarily responsibility to also maintain independence of auditors. So we look at two things before we commission additional work from the auditors. We look at whether the nature of the work will impinge their independence in any way, and we look at the quantum of the work. There are occasions where regulators insist on other work being done by the auditors, and we call that out specifically. There are other elements of work which are naturally best suited to the auditor, such as the transition to a new accounting standard. And then there are the other pieces that you refer to. Right? And we look at those in the context of, will it impinge their independence, or will it be a significant economic benefit? And you can see from the accounts, we don't pay excessive non-audit fees. But Graham, would you like to comment from the auditor's perspective?
Yeah, thanks, Rob. Thanks, Mr. Sweeney. It's a good question. It's a really topical area at the moment, both in the Australian context but also internationally. But certainly from an EY perspective in relation to Bendigo, that we believe there's no conflict at all in relation to the work that we're doing. The vast majority that's disclosed in the financial statements is assurance related. A lot of it is regulatory based. As you'd appreciate, there's a lot happening in the regulatory world at the moment, and so the regulators are increasingly asking the external auditors to do reviews, and even you mentioned consulting services. I can confirm to the shareholders we do not perform consulting services for Bendigo. There is a note within the financial statements of other services. Those other services are related to a particular piece of legislation, and it's assurance related that Luke and I are performing.
Okay, thank you. That might be a standing question for all future AGMs, I think. So thank you.
Yes. Alan?
Yes, Mr. Hubbard, we have a question from Ray Lead, a shareholder from Midiamo.
Thank you, Ray.
Thank you. I've been a shareholder. I've been involved with the Bendigo Bank for about 60 years. Had a lot of good works and everything else. One day I got a letter saying that the Bendigo Bank had taken over Southern Finance. All our titles, they had all our titles and our loans tied up without any knowledge whatsoever at all. We find in there was about $92 million worth of the mortgages they had hold of. And gradually we've been finding out different things, not very helpful whatsoever at all, but there's a lot of people affected, and this is a community bank, and we would like to know how much you paid for the loan book. Thank you.
Look, it's not a question I can answer off the top of my head, I'm afraid. Can we talk to you after the meeting? Because it's quite a specific question.
Okay.
And it's not something that I have readily to hand. So if I can seek you out after the meeting, I'll talk to you about that, if that's okay.
Good.
Alan?
Yes, Mr. Hubbard, we have Craig Caulfield, a shareholder from Maroochy River.
Oh, thank you. A question for the auditor. Look, first let me state I cast no aspersions on EY and what they're doing with you. It's far more generic than that, but we can see in the financial review that it's been reported recently that you know, the major audit firms are protecting information in court cases as privileged information. You know, auditing is about clarity and transparency and, you know, coming clean with things. So I don't like that aspect where it might be perception that it is being covered up. And EY has been involved in 3 court cases that the Financial Review identified on the 16th of October. Would EY consider Graham Samuel's recommendation that the auditing is completely separated and that the net effect for these big companies is no loss? There would be no income loss if simply EY acted as your auditor and you engaged other audit firms to do your consulting work. They would pick up some, they would lose some, and as Graham Samuel says, no net loss. The perception to shareholders, to customers, to the media would be it looks a lot more squeaky clean. Thank you.
Look, I think I understand where you're coming from, but this is a meeting for questions about Bendigo Bank and for Ernst & Young's audit of Bendigo Bank, whereas that is a more generic question about the role of auditing.
I am relating it that EY did more than just auditing for Bendigo Bank, and there were extra non-audit work, so I would like to see that separated.
And look, when you say separated, you mean physically separated by that firm?
No, that firm not to do any other work other than auditing for Bendigo, which they have done.
Yeah, look, and I think I've explained the company's approach to how we assess that. I think Ernst & Young have assessed their approach to that. I do not consider the amount of work or the nature of the work excessive or impinging on independence. The broader debate about the role of auditors in corporate Australia and what work they should be allowed to do or not be allowed to do, I think is for a different forum than this annual general meeting. Thank you.
Thank you.
Mr Hubbard, I have Rita Mazaleskis from Perth.
Hi, just a quick one. Regarding Ernst & Young, am I correct in reading that in your report that they have been your auditor since 1998?
I think that's what it says.
21 years?
Yep.
Approximately. Do you think that's healthy as a corporate business to not change and get some fresh eyes?
Yeah, it's really a question for me as chairman of the audit committee rather than the auditors. I'm not too sure we'll ever see an auditor volunteer.
My other question is, in the annual report,
Yes.
report, it states under the external auditor, Ernst & Young, that there were costs for financial crimes review of $257,500. Can you tell us what that's for?
Yes, by all means. Firstly, just in relation to Ernst & Young and their tenure, we look at this every year in terms of whether we believe there's an impact on their independence. It's a trade-off between the knowledge that they have and hence the in-depth knowledge they have of us and the quality that brings to an audit and the independence of mind. There were some changes probably well over a decade ago now which forces the audit firms to rotate the leads on their audits every 5 years. That has been a very useful mechanism to get a fresh pair of eyes into the audit. Coming back to the $250,000, you're probably familiar because of the press that has been had with, I think it was Tabcorp, Commonwealth Bank, and more recently I think Westpac for the various AUSTRAC inquiries that have been made. Now I don't want to suggest that we have a similar situation to them because we do not. But it prompted a serious review of how we go about protecting the organisation from financial crimes. There is a substantial amount of cyber engagement with banks, and Bendigo Bank is not exempt from that, in looking to either traffic money, money launder, but also defraud the bank. That's a constant battle going on between large organisations such as Bendigo and the people who wish to do that. We need to ensure that our processes and systems are up to scratch in dealing with those issues. We engaged Ernst & Young because they knew our core systems well, engaged an expert from them to have a look at how we respond to financial crimes. So it's not financial crimes being undertaken within the organisation, it's protecting the organisation from those who wish.
It would be handy if they incorporated the two. In regards to the review that you're talking about, How long did that review go for? Do you know?
I can't recall, but it was some months. It set out a blueprint. It's now in the hands of management and that's been well implemented.
Okay,
So
it's just an excessive amount for customers and shareholders to read on a piece of paper.
Yeah,
So,
I understand the quantum is large.
Okay.
The value was larger.
Yes, just following up on Rita's comments there. In the United Kingdom, it's now mandated to rotate audit firms, not just the audit partners, every 10 years. Would Bendigo Bank be prepared to introduce a voluntary scheme before it's mandated in Australia to rotate audit partners every 10 years?
We will look at that this year.
Thank you.
No more questions of the auditor? Okay, I'll now move on to questions on the bank's annual financial report. Are there any questions more broadly on the annual financial report rather than specifically of the auditor, please? No, there being no further questions, I'll pass back to Robert. Thank you very much. Sorry?
sorry, I did put my hand up.
That's okay. Sorry, Rita, I didn't see you. I didn't see you.
I just want to ask a question. I've just got to see where I've written it down. Can you tell us, in regards to acquisition, origination and securitisation of loan portfolios, would you be able to give us the dollar figure of what you have on your balance sheet and off your balance sheet?
Probably I cannot at this point. I can, with some digging into the accounts.
In layman's terms for everyone to understand.
But Travis, can you? Yeah, can we talk to you about it later? Just to make sure we give you the right number.
I thought it would be of the benefit of everybody, actually.
Well, I'm happy to look at it while the meeting goes on, and if we have an answer before the end of the meeting, give you the answer.
Okay.
Okay?
Thank you.
Thank you.
Okay. So now we're up to the matters that require voting. So I'll now open the poll for voting and we'll move to the remaining items of business. To assist with the poll, Colin Fawns from Boardroom, our share registry service provider, he'll act as returning officer and Colin will be available to help anyone in relation to the poll. Where's Colin? Oh, here's Colin. You can submit your voting card at any time in case you need to leave the meeting early. I think I've already seen a few people do that. But please, I hope you'll stay and watch what's going on. Conclusion of the discussion on each voting item, you'll be given time to mark your voting cards. So please complete the vote, place the completed voting card in the ballot boxes, which will be at the front at the end of the meeting. So let's get now to the election of directors. First, we'll go to our newest board member, David Foster. David was appointed in September after an extensive search. He's an experienced independent director, a wide range of other companies that are set out in the matters before the before the meeting. Primarily, his experience as an executive was in financial services with Westpac and Suncorp, including as chief executive of Suncorp. And as I said, to have the experience of actually running a bank on the board is, I think, absolutely crucial. I'm sure he'll make a great contribution to the board. He's a member of the Credit and Risk Committees, and we're pleased to recommend his election to the board. Anything to say, David?
Thanks very much, Robert, and I'm certainly looking forward to contributing to the future of Bendigo and Adelaide Bank, and believe it's got some terrific strengths as well as some great opportunities that it can leverage in what is a very challenging environment, as you've heard from Robert and Marnie. I believe my industry experience, both from a board and executive point of view, will enable me to make a contribution to the future performance of the group for all of our stakeholders. And I'd certainly like to thank my colleagues for their confidence in nominating me, and to you, our shareholders, for your support.
Thanks. So, as is set out on the screen, I'd like to move that David Foster, who retires from office under Rule 59 of the Constitution, is elected as a director of the bank. The direct voting and proxy details in relation to this are now displayed for your information. Are there any questions? Paul?
Paul Fanning here, shareholder.
Robert, I have a question I'll put through to in regard to David Foster's election, and I certainly see his excellent credentials in financial services at both Westpac and Suncorp Metro. What is of concern, and I've seen it come up a few times before, is the workload which is held by an incumbent director or a director about to be elected, page 5. I note David is a director of G8 Education Limited, Gensworth Mortgage Insurance, Motorcycle Holdings, Thorn Group, and the council member of the University of Sunshine Coast. I would hope that the board has looked at, of all directors, looks at the other interests that they have that are complementary or ancillary to the election and efficient time giving of the director to the board. Robert?
We do and we did. But David, do you want to add something?
Only to add, which was covered off in the proxy reports and nomination reports, that I did, on a planned basis, retire from 2 existing commitments, Chair of Thorn Group and Chair of the Regional Investment Corporation, to ensure that I had more than sufficient capacity to contribute to Bendigo and Adelaide Bank. Thank you.
Okay, thank you.
More questions?
Yes, Mr. Chairman, I have Eric Pascoe, a shareholder from the Australian Shareholder Association.
Mr. Chairman, I'd like to briefly declare the Australian Shareholders Association's voting intentions for all the candidates to help expedite the meeting, if I may. Our intention was to vote for Mr. Foster as long as he'd adhered to his undertaking to retire from Thorn Group, as you've just said. We ask you, Mr. Foster, to commit to acquiring a meaningful shareholding in the Bendigo and Adelaide Bank in the coming 12 months. We'd also like to we also intend voting in favour of Mr. Hubbard and Mr. Matthews, and appreciate both their contributions to the board over their time. Ms. Harris has been on the board for 3.5 years, but holds just 2,000 shares in the Bendigo and Adelaide Bank. The ASA thinks that's not sufficient. The majority of the board set an excellent example with regard to the level of shareholdings, and it would appear to us, Ms. Harris, that you're out of step there with the rest of the board. We will be voting against Ms. Harris's re-election. Thank you.
We have discussed this question of, over the years, opinions about whether directors should hold or should not hold shares have changed. So we don't have a policy on that. But we note your comments. Thank you.
Mr. Chairman, we have a question from Craig Caulfield from Maroochy River.
Mr. Chairman and Mr. Foster, welcome to the board. Given that I hear that you are resigning from some other positions, I think that's good. It looked as if there was too much on your plate there, given the amount that you have to cover in these, this time of banking. I'm just wondering, we would like to be able to engage with directors a little more. I realise management is there for that, but when we've got legacy cases that are long-standing, the ability to be able to meet with and talk with directors is very important. Given that we're both on the Sunshine Coast, would you care to catch a break with me at Coolum? That's a wave break for anyone that's misunderstood. We're both on the Sunshine Coast. If you prefer Maroochy, well, I'm happy to run with that. In other words, could we catch up for a meeting?
Can we move on rather than organising your social calendars?
It's actually, no, it is. I was trying to bring a light-hearted.
I was trying to be.
We're both trying to be light-hearted. Is that possible to flag a meeting in the future?
I don't surf, but I'm sure I'm happy to catch up for a coffee sometime.
Thank you.
Okay. So I'd now like to put the motion Can you please complete your vote on item 2 of the agenda by marking your voting card? Thanks. The next item is to consider the re-election of Jan Harris in accordance with the listing rules and the Constitution. Jan's been a director since 2016, since her distinguished career in the Australian Public Service. She's got huge experience in this massively important area of business for the bank, and she's now chair of the Risk Committee. She does lots of other work. Jan has been an absolutely outstanding director, huge contribution to the business of the board and of the bank, and I'm delighted to recommend that she continue. Jan, would you like to say something?
Thank you, Robert, and hello everyone, and thank you for all the contributions you've made today. I'm pleased to have the opportunity to be considered for re-election to the board. Bendigo Bank has a remarkable history, and I strongly believe in the unique role that Bendigo Bank plays in this banking system. As Robert has said, most of my working life has been spent in the Australian Treasury in Canberra, and this has given me a deep understanding of how government and regulators work, and I consider that my experience has assisted the board in navigating the continuing challenging regulatory and economic environment. I look to continuing to make a strong contribution to Bendigo Bank, and I thank you.
All right, so I'd now like to move the motion that's on the screen. Jan Harris, who retires from office under Rule 72, is re-elected as the director of the bank. Direct and proxy voting information has now been displayed. Are there any questions? No? Then I'll put the motion. Would you please complete your vote on item 3 of the agenda by marking your card? The next item considers the re-election of Rob Hubbard in accordance with the requirements of the listing rules and the Constitution. He was appointed an independent non-executive director of the bank in April 2013. Before that, he worked with PwC with great experience in auditing and accounting. He's a non-executive director of Orocobra and Helios. He's chairman of both those companies. He chairs the audit committee, as you've seen him perform this morning. We are delighted to recommend his re-election. Rob.
Thank you, Robert, and thank you, shareholders. Look, I have been on the board for 6 years. I believe I've made a valuable contribution to the Risk Committee, the Audit Committee, and to the broader board agenda. When I first joined the board, I recall some colleagues saying to me that you're going into a very stable industry. Well, they were wrong. In the last 6 years, particularly the last 3 years, have seen a lot of turmoil in this industry. Much of it's self-inflicted. I think what we've learned is that companies that go their own way are bold enough to direct their own way have proven to be more successful than those who follow the herd. Bendigo does that. Being head office here in Bendigo is testimony to that, but at the same time, being the first to the market with a genuine digital bank is part of that. The next few years are going to be even swifter, more change, more challenge, and I think the experience I've had over the last 6 years puts me in a great place to work with my colleagues on the board and the management team to place Bendigo as well as it can be. So I thank you. I consider it a privilege to represent you on this board and look forward to your support. Thank you.
Thanks, Rob. So the resolution is that Rob Hubbard, who retires from office under Rule 72, be re-elected. The voting details are now being displayed on the screen for you. Are there any questions?
Yes.
Jana.
Thanks, Mr. Chairman. I've got Russell Patterson, who's a shareholder from West Gippsland.
Russell.
Robert, I understand you're on the technology committee. What guidelines and do you put in place for updating legacy systems of the bank?
I think Robert made the comment earlier that the RFS has a similar tenure to himself. One of the things that I think the bank is looking very closely at its legacy systems. That doesn't mean you necessarily throw them out if they're working, but you look at them closely. The one thing that is changing though is how consumers, customers, other stakeholders want to engage with the bank. And so that legacy system needs to adapt and change and work with those customer-facing processes and systems. So that's where the focus is. There's big risk with changing out systems holus bolus. So you need to think carefully about it, and the Technology Committee and the Risk Committee do think carefully about that. But you also cannot avoid it, because to remain competitive, you have to have technology that customers want. So that's a long answer to your question, but I suppose what I'm saying, it depends what change you want to make.
Are there any other questions? If not, I'll put the motion. Could you please complete your vote on item 4 of the agenda by marking your card? The next matter for consideration is the re-election of David Matthews. David's been on the board since 2010. He's an independent non-executive director based in the Wimmera. He's a farmer. I think his background and unique experience, I think I can say that safely, has been set out and described in the papers. His involvement with the community bank model has continued from the days when he was involved in establishing the very first one. He's a very active member of the Credit Committee, the Governance and HR Committee and the Audit Committee. We're delighted again to recommend his re-election. David.
Thanks, Robert, and to Michael from Catamatite. I'm not the next cocky, as Robert's pointed out. I'm still a cocky, and a very proud one. But I have always remained somewhat surprised that someone of my background has been given an opportunity to be part of a board of an ASX company of this size. And whilst that was quite challenging in the early days, I've come to understand that it's actually through that lens, and I consider myself to be from the small end of town, if you like. So that's the lens I try and bring into the discussions at the board. I try and bring the views of Middle Australia, the people with sort of dreams and aspirations, and the people who need a bank like Bendigo to really support them in that. So, Robert, I've been very, very grateful for the opportunity to be here, and with the support of the shareholders, I look forward to another term.
Thanks, David. So that's the resolution, that David Matthews be re-elected. Proxy details are now being shown on the screen. Are there any questions? Milton.
Sorry, I've got one before Milton, Mr. Chairman. Russell Patterson also has a question.
Russell, sorry.
You're a cocky, I hear. With your directorship, will you be bringing the risks of rural and regional Australia to the board and be across the tough times out there?
Thanks, Russell. So I live and breathe it every day, along with thousands of other people in regional Australia. I'd like to perhaps point out to the group here that a few years ago we appointed a managing director to Rural Bank, Alex Gartman. First met Alex when she was appointed as the CEO of a farmer research group in the Wimmera Valley of Victoria. So we've deliberately put people in senior roles in this organisation that have a depth of understanding and experience in the industry, and no more evident within Rural Bank. There's a whole lot more we can talk about after the break about what we're doing in that space, but it's very close to our hearts and something we're working on with a lot of vigour.
Alan.
Mr. Chairman, we have a question from Craig Caulfield, a shareholder from Maroochy River.
Hello, Chairman and Mr. Matthews. I noticed that you operate your own farm, you have an agri-export business, you chaired the first community bank. On that basis, and given the a large proportion of the legacy cases within bank Warriors and bank reform now, I'd like to endorse you. That's very important that the directors have that input. So thank you.
Thanks, Craig.
Thanks, Mr. Chairman. I have Milton Wild, a shareholder from Melbourne.
Mr. Matthews, I noticed you made reference to Alex Gartman. I'm a little bit concerned because Alex has a terrible history of devastating farmers and rural producers throughout the country, predominantly Western Australia.
Mr. Wild, could you please...
Can I finish my question?
Be polite.
What I'd like to know is, with your farming background, are you actually going to have some input into those circumstances to prevent those situations from occurring?
So, Milton, just a comment for a start. I don't think it's helpful at all to take these sorts of discussions to a personal level. So I think there's broader and more important issues for us to discuss. You know? So I do take objection with personalising that.
That's fine.
To anybody. But the answer is definitely yes. And as I said in my comments, you know, I think it's unusual for someone of my background to be on a public company board, but it is something that Robert Johansson, it's a legacy he's left. He set out to sort of break that normal corporate mould and find people of different backgrounds to be here to help try and guide this organisation and to find people who are relevant to the key stakeholders we have.
I think it's fantastic. I really do, and I applaud you. I'd just like to know that you're going to get involved in these matters.
I'm involved in them every day. So
I don't
as
want
I said, one of the things I find a bit bemusing, I suppose. So one of the proxy advisors votes against my re-election because they see that I'm not independent enough. The fact that I'm out there living amongst these communities, working within agriculture, that's seen as actually something that's detrimental to the function of the board, and I dispute that. I actually think it allows the board to have much greater insight into what's going on out in the areas where their customers are based. You know, so,
I agree. Yeah. I agree. As long as you do get involved.
Yep.
Thank you.
Frankly, one of the problems with these sorts of forums is they provide easy vehicles for people to make, well, I won't describe it exactly what I think. So I think, can I say, I know Alex Gartman very well and she's an outstanding executive. Can I have the next? Can I have the next question? Are there any more? Thank you. So I'd now like to put the motion. Please complete your vote on item 5 of the agenda. Thank you. The next item of business is the remuneration report. I'd like to hand over to Tony Robinson.
Thank you, Robert. The 2019 remuneration report appears in the 2019 annual financial report and contains information about the bank's remuneration arrangement for its key management personnel. Remuneration arrangements within Australia's banks have stayed in the public spotlight over the last 12 months. The final report of the Financial Services Royal Commission made a number of recommendations related to the design, implementation and governance of remuneration frameworks. APRA recently finished its consultation period on how to implement these recommendations. While they're not yet released, we know that more change is coming to the industry. The finding of the Royal Commission support our long-held view that remuneration structures which are leveraged towards short-term and individually focused rewards work against good culture and behaviour. Reflecting this, the board has historically limited the proportion of incentive-based pay, particularly incentive-based pay that's linked solely to an individual's performance. We achieve this by dividing remuneration into 3 core components: base pay, short-term incentive and long-term incentive. The proportion of base pay is paid in shares and deferred for a period, and where STI is above a threshold amount, a similar deferral occurs. And the long-term incentives are paid all in shares, subject to the achievement of performance hurdles set by the board. During the year ended the 30th of June 2019, the board approved increases to the remuneration settings for some executives. These increases reflected changes in roles and organisation structures that resulted in increased accountabilities and responsibilities of the individual executives. several executives also received small increases in a deferred-based remuneration component. These adjustments brought their remuneration closer to market competitive rates. As previously discussed, the year saw a solid earnings result in an environment of low growth, political uncertainty, subdued consumer confidence and increasing competition. However, the bank did not achieve the threshold levels of earnings required to establish a bonus pool. Therefore, no short-term incentives were paid to the managing director or other executives. There were 2 long-term incentive grants tested at the end of the 2019 financial year. Grants made in 2016, which had a total performance period of 4 years, and grants made in financial year 2017, which had 3-year performance periods. The relative total shareholder return of the bank was above the median of the peer group, which resulted in a partial vesting in both the 2016 and 2017 grants. The 2017 plan also included a tranche of performance rights that were linked to our customers' objectives. For this tranche to vest, the bank's average net promoter score for the period had to be more than 20 points above the average of a peer group of 11 major Australian banking brands. The bank achieved this with an average net promoter score that was 29 points above that industry average. In total, 65% of the 2016 grant and 75% of the 2017 grant vested. The vote on the remuneration report is advisory only and doesn't bind the company or the board. Nonetheless, this vote is very important, not least as it provides important feedback to the board from shareholders. I now move the motion as presented on the screen. The remuneration report for the bank is set out in the annual financial report for the financial year ended 30th of June 2019 be adopted. The direct voting and proxy details are now being displayed for your information. Does anyone have any questions in relation to the remuneration report?
Mr. Robinson, I have Rita Mazalesli. Sorry.
Thank you. Thank you. In regard to the Board Governance and HR Committee Charter, under responsibilities, there's Board Governance. So it says the committee provides assistance to the Board on nomination matters including renewal, succession, performance and remuneration, as well as corporate governance developments. And then 3.2 is grants of outcomes and discretions. It says that it receives a report from the Chair of the Risk Committee at the joint meeting with the Risk Committee and Audit Committee that considers the remuneration outcomes for each person as required under the remuneration policy. The report is to cover risk and compliance gateways and other relevant risk considerations, including whether any downward adjustments are appropriate. What I'd like to know is, given that you've just put forward that we vote for the remuneration report, in regards to the Financial Services Royal Commission and admissions by the bank where there have been issues to do with current and legacy customers, do you think it's appropriate, and do you fully, I guess you'll say yes, support the remuneration report? And has there been any downward adjustments whatsoever given the current environment and the impacts within the bank?
So, yes, you've guessed the answer. Yes, I do completely support the remuneration report, but I get the underlying question. And the answer is that it became a moot point this year because the way we calculate the short-term incentive pool, and that's what we adjust for the risk and governance issues, that pool was zero. And it's a really important point because that pool is created out of profit over a target amount. And that means that to create that pool, it requires all the hands in the organisation working to create an outcome that's positive for shareholders and other stakeholders. And only at that level, because that takes it, the reward structure, the creation of that pool is out of any one individual's hand, it stops them being in a situation where they can make decisions that benefit themselves but may come at the cost of another stakeholder.
So do you think it's fair that if there is a lot of money in the pool, and the bank has been very successful in that financial year, but there have been implications with cases that there is no accountability because there's a 2% increase in non-executive directors' pay?
Well, firstly, it's obviously all sort of slightly different issues. So the first is that in years where there's a big pool, and I think we'd all be celebrating that because that would mean that the shareholders would be receiving the majority of that benefit. If there were those instances, that's what the pieces of the process that you've described would cause to see individuals or the group have a reduction in the entitlement that they would otherwise receive. So it absolutely does what the process is designed to do exactly what you're asking to do.
So I guess in regards to shareholders' interests, there's a 7.7% decrease in the last financial year, but there's a 2% increase in directors' base salary.
Well, again, the issue for...
Is that fair?
Well, yeah, it's the same as the responsibilities for the individuals at the remuneration level. Some of those people, their responsibilities have
but the drop of
grown.
7.7% is impacted by redundancy and remediation.
But again, the change in the performance of the business and the reward for the people inside the business, they have to be linked. But they can't be perfectly correlated.
But if you reward people in an environment where you've acknowledged that there have been failings, how do you reward them? How are they ever going to change the culture within the business to get past all the issues of what's going on with the Royal Commission?
Well, again, that's a misrepresentation even of the numbers for this year, where the short-term incentives that were received by the executives is zero. And, we can't take it below zero, obviously. And so, yeah, the performance of the business has flowed through to the remuneration for the group that you're talking about. In terms of the remuneration for the directors, you're right, there's a 2% increase to directors. We benchmark the directors each year to ensure that they're appropriately paid and that we can attract the best talent to the board. And that's a process that we treat seriously and cautious about it. There's no large increases over any length of time. And you can see the complexity and difficulties that keep rising to the board. The challenges, of operating a board at this level and attracting great talent to it means you must be paying
I agree.
salaries.
I totally agree. It just would have been nice for the community if you didn't award the 2% increase, and maybe during this period where there are all these outstanding reviews, that you held the salaries at what they were.
And
That's
I've
all.
got no problem. I'll make one last observation on it, which was that the prior year was zero. In the core piece of the period that you're talking about, the 2% is the going forward number. So we actually agreed and adopted
Misconducts go for longer than
period.
12 months, just so that you know. Thank you.
Mr Robinson, I have a question from Craig Caulfield from Maroochy River.
I'm Mr Robinson, thank you. Page 29 of the annual report, you talk of the various sleeves, and you've got one sleeve, 35% for, that's the customer hurdle, relating a little bit to what my colleague Ms Levickis was talking about, and you've got 65% for the TSR, which is total shareholder returns. Is that right?
Yeah.
Yeah. A couple of questions here. One is, I would like to see a greater increase on the customer side. Naturally enough, you've seen from what we're talking about. I would rather see a 50%, 50%. And I think that would be in line with what APRA's been recommending. So I'm wondering, my first question is, why is it 35-65 if APRA is recommending 50-50? Is that just timing that hasn't come in yet, or am I off track with somewhere else?
No, it's a great question. It goes back to one of the other people that talked about the report from ISS. Some of these proxy advisors, unsurprisingly, the people who own the shares are driven by short-term rewards and therefore want a focus on short-term rewards. So they're driving the vast majority of those shareholders actually vote against or are encouraged to vote against reward structures that focus on anything but shareholder reward. We agree with you that things like Net Promoter Score and others that make sure that the minds of the executive are looking beyond 1 year, are looking to the sustainability and the success for all stakeholders of this business over a longer period of time are really important. And when we first introduced this measure, there was a lot of pushback from proxy advisors. We've stuck with it. We look at increasing it, but we think that to have too much just to one measure of Net Promoter Score is an overweighting. So we're working to try and find other measures that achieve the same goal as Net Promoter Score, i.e. encouraging executives to look into the future, but one other than Net Promoter Score, and we'll lift the weighting over time as we identify those measures.
Yeah, thank you. Okay, we're in lockstep in terms of having that allocation there, and it seems to me to any proxy firms or shareholders that are looking at just 100% on shareholder returns, it's quite short-sighted. We'd all be aware that you will lose market share as people move to other banks if that's the case. So thank you, we're on the right page. I just wanted to drill down a little bit more granular on the first sleeve, 35%, and you've touched on it there. I was frankly shocked to see 35%, and then I looked into the first sleeve and it says it's the Net Promoter Score. The Net Promoter Score is averages across lots of people. I'm sure I've dealt with Bendigo and I haven't been happy, and I haven't had a survey that says, well, I recommend. I'm sure Mr. Wild got up and, I'm not sure how it works out, but the people that are aggrieved, we don't seem to get these surveys. Either way, that's a very simplistic answer. So imagine someone's walked into a bank, made a deposit, walks out, gets a survey at home. They say, yes, I'm happy to recommend the bank strongly. They made their deposit of $80 and it worked. But someone else in the country that's dealt for 8 years and they've lost their third generation family farm says no. That's one tick and one cross. The gravity of the differences is not taken into account in Net Promoter Score. Now that's where the Commonwealth Bank did drill down somewhat, not enough. And Bendigo Bank needs to go here. And I think Marnie Baker was talking before of saying we'll take on extras, and you alluded yourself. You need to look at numbers of cases going to the customer advocate, number of cases going to AFCA, number of cases going to court, and not just the numbers of cases, but what are those results? What's the feedback? Is it that 100 cases goes to AFCA and 20 are resolved and 80 remain unresolved? So I would like that to be investigated on a much more granular basis. And you talk in the REM report about engaging with stakeholders. Well, we represent 15,000 members and followers, 14,000. We'd love to engage with you on those things. Thank you.
Thank you for those comments, and we agree. That's why, as I said, we haven't increased Net Promoter Score above 35% because we don't think it's the solution. The only thing I would note is that the target for Net Promoter Score is 20 basis points above the average of the other banks. The average of the other group that we use, I think, is -3. So it's not just doing it well, it's doing it materially better than the other groups in the marketplace. So it is a slightly more nuanced measure, but I understand the point you're making. And as I said, we are looking for other measures that will ensure that people are looking forward and looking at all stakeholders.
I do get your target group being the other banks, but that's probably the worst target. I know it's relevant. Let me just refer to page 31 on your report, where the Net Promoter Score for the last 5 years has been +27, +28, +30, +28, +28. That's an automatic bonus handed out when you've got to be +20. There's no incentive to say, let's improve that.
Well, again, we do try and think through all of these things. So you've got to be finding measures that can be independently verified. There's a limited set that you can use to move away from total shareholder return. But the other observation, Marnie's LTIs are all 4 years. So that's great. I can feel really comfortable that I'm going to be getting a good Net Promoter Score for 1 year, for next year. But if Marnie doesn't keep making good decisions, in 4 years' time, that will have collapsed back to where the other banks are. And that's why having it attached to not an STI, not a short-term incentive, but having it to a long-term incentive is the right outcome. It causes her to be thinking about how do I maintain that lead, given it's so important to us as we compete to have that sort of advantage over the other banks. Because, as Robert has mentioned, they've got some structural advantages at the capital adequacy and other areas. So we have to maintain that advantage and that lead. And as I said, it's attached to the LTI because it's causing her to think about how to maintain it over a longer period of time.
Yeah, I agree with the principles, but I think the figures I've put bear out that it's too easy. Thank you.
Mr. Robertson, I have Philip Sweeney from Torquay. Thanks.
Yes, thank you. My question relates to clawback provisions for both the executive remuneration and executive remuneration. These clawback provisions, if they were in place, would only apply for like a major scandal erupted, such as, say, the AUSTRAC scandal that enveloped the Commonwealth Bank, where the directors may have been hadn't have knowledge of this, but just let it fester wrong until it blew up. And therefore, if there were clawback provisions in these sort of extreme circumstances, and hopefully there would be none, but still I think it would give shareholders comfort to know that the directors have some skin in the game and would be extra vigilant to make sure that when they do get some bad news, they don't let it fester, and they make sure the executive of the bank is taking remedial action and doesn't sort of sit there and just have tea and scones at the annual or the monthly board meetings. So your comments on clawback provisions, please.
We structure executive remuneration, that's what you're pointing at for clawback. We structure the incentives for the executives, and particularly Marnie, for base pay, short-term incentive and long-term incentive. And the base pay, we put a portion of that into shares, and the vesting of that is deferred for a number of years. Both that deferred component and that LTI component and the STI component, as I've talked about before they finally vest and before the money is paid over, a review is conducted and a decision is made whether to vest and to vest the whole amount. So the clawback for us isn't a clawback, it's a decision we make with the benefit of hindsight, because the decision to vest occurs sometime after the entitlement is established.
Well, I think my question related to the board remuneration as well. And I think there were some cases in the Commonwealth Bank, they asked their directors to give money back and they refused. So it'd be a case of, if there's a policy there, that would be, I think, solve that sort of issue. And I said this is only something when something extreme occurs. It's not something that would hopefully ever occur, but it would be there in the case if it did.
Yeah. And I think the best situation there is obviously to avoid all of that. And with the directors' fees, the agreement is that it's a base amount. That's the generally accepted. Ups and downs, there's not a belief that incentives at the board are acceptable and reverse incentives are the same.
Thank you.
Any other?
Yeah, thanks, Mr. Robinson. I've got, sorry, I've got his name now. Russell Patterson, a shareholder from West Gippsland. Thank you.
I'll be quick. Page 32, the targets, the ones that haven't been met, 2 and 3, why weren't they met, and do they still stand this year?
They change each year. So some of them are longer term goals. So the ones that partially met is the one that you're talking about, 2. And it's a medium-term goal, so good progress is being made, but it just can't be met at that time. And we would say in the decision, if there was an STI pool this year, we'd be making a decision about whether the progress on that target was appropriate given the length of time we expected it to take and the progress had been made, to that goal to date. So. Any other questions?
Mr. Robertson, I have another question from Craig Caulfield.
My last question, but a very important one. I think for those that want to see the questions moved on, I attended the primary production inquiry in Roma. I heard of 4 families that had multi-generation farms, and I'm not saying Bendigo Bank, where members of their families suicided. We travel from around Australia. Many of us do it off New Start or Centrelink benefits, and we're here trying to work with the banks in order to reform things for the benefit of the shareholders, for the directors and for ourselves. Just given what I heard in the background. My final question is regarding ASIC. You're aware that ASIC is taking action against a couple of banks, including Bendigo Bank, for unfair contract terms to small businesses. Correct me if I'm wrong. This should feed into REM, If this is something that's been unfair and small businesses have lost the advantage of having a fair contract, is that something that you'll take into account in the REM discussion this year?
So 2020 is, you're asking, a forward-looking issue, and the answer is all of the issues related to governance and risk are fed into the vesting decisions that occur at the, post the end of the year.
Yeah, thank you.
So, is that any other questions? Yeah. I think,
Mr. Robinson,
yeah.
I have another question from Rita.
Yeah.
As a list.
I think.
Just a quick one. Just in regards to if a director...
Yeah. Yes.
Would you like me to ask my question?
Yeah, sure.
Okay. Just in regards to executive employment terms and notice of periods and payments if the bank ends the contract for cause being a wide number of things. I noticed that the termination for cause does not require a notice period, but it states that payment of prorated gross salary and benefits, including payments of accrued and unused leave entitlements, is required to date of termination. Firstly, I find that odd, and also what happens with the STI and LTI and deferred entitlements?
In those instances, it would almost be certain that they wouldn't receive them if it was for cause, and the other is just a legal requirement. So it can be curious, but it's not a decision in our control.
Has that ever happened at Bendigo?
We do occasionally dismiss people, for cause, and it's a really sad, regrettable moment. We absolutely do strike those unfortunate circumstances.
Within executive or the board?
No.
Okay, thanks.
Thanks, Mr. Robinson. I've got Milton Wild, a shareholder from Melbourne.
Sure.
Sorry, just an observation for those that are wincing and whining in the background. We're all shareholders here, and we are entitled to voice our questions, and we're entitled to have our questions answered. And Bendigo is probably one of the few banks that will give us that opportunity. And for you to sit there and grizzle, if you're not happy, just leave.
Well,
go to another bank.
Again, I think it's more. In fairness to other people, Milton, I think that's a comment, not a question, and that's fine for you to make that outside of this, but not to consume people's time when they've got other things they may want to do. So I think that it's getting that balance right. That's the key. Good questions, fair questions, but not comments. And is anyone else got any other questions that they'd like to ask? Otherwise, I'll put the resolution to a vote.
Can I just apologise to all the shareholders? We're really sorry we have to do this, but it's the only arena and the only opportunity we as the bank victims can get a voice in front of the executive of the company who refused to talk to us. And I've got to correct myself for a second because I will be meeting with Marnie after this meeting, which I thank her for accepting the meeting. But there are a lot of bank victims and my fellow bank warriors who haven't been given that opportunity. So we do apologise for holding up your time, but this is very important on behalf of victims across Australia, and there are a lot of Bendigo victims and other bank victims as well. So I hope you can please just understand our plight. Thank you.
And very, very nicely said, Rita, and thank you for that comment and explanation. I now put the motion to the meeting. Please complete your vote on item 6 of the agenda by marking your voting card. Seven. So, 6, sorry. I haven't got my glasses on. I can see the number, but not the words. The next resolution is for the approval of the Managing Director's participation in the Employee Salary Sacrifice Deferred Share and Performance Share Plan. Sorry? Yeah, sorry, Sorry, I thought we put those up. The direct voting and proxy details will now be displayed. Yeah. My apologies. I thought I did that before I asked for questions. I thought so. The next, but I could be easily confused. The next resolution is the approval of the Managing Director's participation in the employee's salary sacrifice deferred share and performance share plan. The Board is proposing to grant 50,000 performance rights to our Managing Director, Marnie Baker, under the bank's equity incentive plan. This is a key part of her total remuneration package for the financial year ended the 30th of June 2020. The 4-year performance period of the grant runs from the 1st of July 2019 to the 30th of June 2023. The grant is split into 2 tranches. 35% of the grant is linked to the customer measure, which compares the bank's Net Promoter Score to the Net Promoter Score of other major Australian banks, while the remaining 65% is linked to relative total shareholder return. And we've spoken a bit about both of those and the flaws and benefits of each. There's been some commentary on the bank's use of this measure, the Net Promoter Score. The Board is of the view that having Net Promoter Score in our long-term incentive plan ensures executive are focused on maintaining this advantage that we currently have over the long term and ensuring it takes or encouraging the executives to take a long-term view of customers and shareholders when making decisions. On average, Net Promoter Score of 25% in 2019 was an outstanding result. Further, the importance of a balanced financial and non-financial measures was a key recommendation in the final report of the Financial Services Royal Commission and is a position that is supported by APRA. And we make that point because, as I said, we do get some proxy advisors who encourage us to have no measure other than shareholder return. The Board asks you to support this resolution. I now move the motion as presented in the notice of meeting, which has been summarised on the screen, that the bank approve a grant of performance rights to the Managing Director under the Employee Salary Sacrifice Deferred Share and Performance Share Plan, as described in the explanatory notes accompanying this notice of meeting and in accordance with ASX Listing Rule 10.14. Any corresponding issues of ordinary shares in the bank to the bank's Employee Share Plan Trust to be held on the Managing Director's behalf. The direct voting and proxy details are now being displayed for your information. Are there any questions on the proposed grant to the Managing Director as described? Well, I'll grab that moment of silence and I'll put the motion to the meeting. So thank you. Please complete your vote on item 7 of the agenda by marking your voting card. Thank you. I'll now hand back to the Chairman.
Thanks, Tony. So the last item on the agenda for the day is a decision in 2 parts. Both resolutions are special resolutions and require at least 75% of the total votes today to be cast in favour for them to be passed. As most of you would know, the bank is required to maintain minimum levels of regulatory capital in accordance with the standards issued by the regulator, APRA. From time to time, the bank issues a number of different instruments to satisfy the various elements of its regulatory capital requirements, including instruments that constitute what's referred to as additional Tier 1 capital. Currently, we have 3 classes of convertible preference shares on issue which constitute additional Tier 1 capital, namely convertible preference shares 2, issued in October 2014, convertible preference shares 3, issued in June 15, and converting preference shares 4, issued in December 17. Each of these classes of convertible preference shares is subject to terms and conditions which require the bank to convert the convertible preference shares into ordinary shares in the bank on a specified mandatory conversion date. Those terms and conditions also allow the bank to repay the face value of those convertible preference shares in certain circumstances and subject to certain conditions, including, importantly, only when APRA approves, prior to their mandatory conversion date. The purpose of the resolutions today, in items 8A and 8B, together, which we refer to as the CPS2 capital reduction resolutions, is to provide the bank with flexibility as to how it manages its capital, and in particular, it gives the bank flexibility to repay the face value of its convertible preference shares too, if it decides to do so prior to their mandatory conversion date, which is 30 November 2022. Under the Corporations Act, the CPS2 capital reduction schemes require the approval of the bank's shareholders, subject to the voting restrictions set out in the notice of today's meeting. The bank has decided best to seek such approval at today's AGM rather than hold a separate extraordinary general meeting at a future time. Having flexibility with respect to how the bank is able to manage its capital base is important, and I trust the comprehensive explanatory notes that accompanied the notice of today's meeting clearly articulates this. The directors recommend that shareholders vote in favour of each of the CPS2 capital reduction resolutions in items A and B. So I'd now like to move the motions as presented in the notice of meeting, which are summarised on the screen. I won't read them through, but is to approve the terms and conditions of the selective capital reduction processes. They're the resolutions. The direct voting and proxy details are now set out. Are there any questions? If not, I will put the motion to the meeting. Could you please complete your vote on items A and B on the agenda by marking your card. So, ladies and gentlemen, that's it. All resolutions have now been put to the meeting. Please complete your voting cards, put your signature at the bottom, put them in the ballot boxes. The counting of the votes on the poll may take a little while, so we won't keep you waiting. I'll close the meeting in a minute. We'll announce the results of the poll through the ASX announcements platform. But now I'd like you to have the chance to hear from the next chair in 5 minutes' time, Jackie Hay. Jackie.
Well, hello everyone, and I would like to start by saying thank you very much for your patience. This has been a long meeting, but many of the things spoken about today and the really wide-ranging questions from some obviously highly engaged shareholders are reflective of the challenges faced by the industry today. There are two key things for us, I think. Whilst we are not perfect, our people do genuinely aim to do the right thing by and to balance the needs of our various stakeholders and to face into issues where they exist. And maybe we do need to be more transparent about how we do this. The second thing I think is how we operate generally and how we have operated over our history means that during these challenging times, we do actually see an opportunity for your bank, given our high overall levels of trust, customer satisfaction, and our history dealing with customers and communities. We will have to continue to transform and evolve as our customers develop and change the way that they want to interact with us. We've firmly embraced technology in how we work internally in the bank and also in our interaction with customers, but there is more to do and we'll need to continue to invest in both technology and transformation as the world changes around us, a lot of which we've spoken about today. However, I suspect, at least in my lifetime, the future will continue to involve people talking to other people, and this will remain a key differentiator of this bank. My hope is that for us as a community-focused bank, we never lose sight of where we came from and that both our past, but perhaps more importantly, our future success remains based on our people doing the right thing by our customers, our partners, our communities, and very much, of course, by our shareholders. You'll get to hear a lot from me going forward. So for today, I really just wanted to say hello in my soon new to be role as chair. I see a lot of familiar faces, so I know I've met many of you over the years, and I look forward to meeting others of you that I haven't over a sandwich very soon. So after a brief look forward, I do want to take just 1 minute for reflection, and that is to say, Robert, you've led this company through many changes, from being a small building society to now a national organisation as Australia's 5th largest retail bank, still headquartered here in Bendigo, in your time over the last 31 years. There are many people who genuinely contribute to the success of a company, but there are very few who can honestly claim to have individually influenced the direction of a company in such a profound and impactful way. And I know, Robert, that you would never make this claim, but everyone who's had the honour of working with you closely knows it to be true. You're absolutely leaving the bank in a far bigger and better shape than when you started, and you should be proud of that. You should also be very proud of the legacy you'll leave on in the people, many of whom are watching today, and in the culture of this company well beyond when you stop attending meetings. So on behalf of all the people who work at the bank, I'll just leave it, Robert, by saying thank you very much from the bottom of our hearts for all you've done and achieved during the last 31 years. You will be missed. Thank you, everyone.
Thanks, Jackie. So thank you all for your, over those years, great support, encouragement and contribution. For me, it's been a great honour and a great pleasure to be able to be involved with such a great organisation. That's the end of the meeting. Thank you very much.